So just comment below, is my voice audible? Yes. Okay. So is everything perfect? Yeah. So in the video description you can find the link, so where you can find these handwritten notes PDF copies. So now morning session, the agenda is completion of acceptance of deposits, registration of charges, management and administration, and few topics of share capital and debentures. So day before yesterday, the topics I covered, a few topics, a little bit improvement has been done in the handwritten notes. So those topics I'll do marathon. Okay. Chalo. Let's start with acceptance of deposits. This topic had a weightage of 5 marks. If a case scenario MCQ comes from this topic, then the weightage will be 11 marks. So 5 marks, one descriptive question. If at all case scenario question comes, 11 marks. Okay. So coming to the acceptance of deposits, deposit includes any receipt of money by way of deposit, loan, or in any other form. So this is a simple definition of deposit. Any receipt of money by way of deposit, loan, any other form, we call it as a deposit. But deposit excludes prescribed categories. Such categories as prescribed by central government in consultation with Reserve Bank of India. Let's see the amounts not considered as deposits. So in the handwritten notes, you can see the summary of amounts not considered as deposits, but in examination, they will ask in detailed. They will ask a particular, they will narrate a story with respect to a particular point. Okay. So that's why, let me show you my master notes. So from this master notes, I will explain you exempted deposits or amounts not considered as deposit. Okay. Any amounts received from the government, any advances or any loans from the government, central government, state government, amount from the sources guaranteed by central government, state government, amount received from local authorities, amount from authorities constituted under an act of parliament or state legislature. You can see ICAI, it came under Chartered Accountants Act 1949. Clear? So amount received from the government is not a deposit. Next one, amounts received from foreign government, foreign or international banks, multilateral financial institutions, foreign financial institutions, export credit agencies, collaborators, body corporate, citizens and authorities subject to FEMA 1999 is also not considered as deposit. One is from government sources, other one is from foreign sources. Next one, loan from banks. Any loan received from banking companies, that is State Bank of India and its subsidiaries. Private sector banks also, you can take HDFC, Axis, ICICI Bank. Okay. Notified banking institutions and cooperative banks. Cooperative banks. For example, AP Cooperative Bank is giving a loan of 10 crores to C Limited. Now, is this loan of 10 crores a deposit or not a depositor? Yes, this is not considered as a deposit. Next one, loan from public financial institutions. Public financial institutions, regional financial institutions, insurance companies, scheduled banks. Any loans received from these institutions are also not considered as deposits. Next one, amounts received against issue of commercial papers or instrument issued as per RBI guidelines. So any amount received against issue of commercial papers is also not considered as deposit. Loans taken from other company, intercompany loans is also not a deposit. Coming to share application money, very important. See here, when you received the funds, date of receipt, when you received the funds, from that date onwards, you will have 60 days time period for making allotment. 60 days. By day 60, you have to make allotment, or else refund that money by day 75. That means you are having a time period of 15 days for refund. For refund, how many days you are having? 15 days. Within 15 days, refund those monies. Then it is not treated as deposit. Sir, suppose if not refunded, then it is a deposit. Then it is a deposit. And you know, here actual refund is required. Refund is required, not adjustment. Suppose, sir, you know, a person deposited 5 lakhs against issue of shares, against shares offer, and unfortunately he was not allotted. You know, his application was not selected for allotment. Now refund within 15 days after expiry of 60. If not refunded, it is a deposit. Suppose, sir, he is having some dues to the company, sir. He is having some dues. He is liable to company some 6 lakhs, sir. Now I want to adjust this 5 lakhs against this 6 lakhs due. So this adjustment, is it considered as refund? No, 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 no. Actual refund is compulsory. If not refunded, it is a deposit. Okay, na? Adjustment also not allowed. Loan from directors. Here companies are of 2 categories. How many categories? 2 categories. Private company, public company. Private company can take loans from directors, directors' relatives. Public company can take loans from directors, but subject to conditions. Condition number 1, we need to obtain a declaration from the director or relatives of the director if allowed. So declaration should specify that this amount, the amount which I am lending to the company, is not out of borrowings but out of from my savings. So this is number 1, condition number 1. Condition number 2, disclosure in board report. Company shall disclose details of the money received in the board report. If these 2 conditions were satisfied, then it is not considered as deposit. Declaration important, disclosure in board report also important. Next one, bonds and debentures. Secured debentures, secured bonds, not deposit. Convertible debentures, not deposit. Non-convertible securities but listed. So listed debenture, not a deposit. Convertible within 10 years, not a deposit. Secured debentures, secured bonds, but you know, for that security, you should provide security only on tangible assets but not intangible assets. So the market value of tangible assets which you provide as security should cover principal as well as interest. Both principal and interest should be covered by the market value of the tangible assets. Then it is not treated as unsecured debentures. If it is not unsecured debentures, then it is not a deposit. Security deposit from employee subject to a conditions, 2 conditions. Condition number 1, maximum annual salary. Security deposit how much? 12 months salary. His salary suppose 60,000 into 12 months, 7,20,000 rupees. Up to 7,20,000 rupees, not a deposit. Suppose if he is depositing 7.5 lakh rupees, now it is a deposit. Now it is a deposit. So 7,20,000 rupees. Receive security deposit, don't exceed it annual salary. If you want to exceed it annual salary, then you know total amount is a deposit. And next one, there should be no interest on that security deposit. Company should not pay any interest on that security deposit. So if these 2 conditions are satisfied, employee security deposits are also not considered as deposits. Next one, any non-interest bearing amount received or held interest. Company received funds, company is holding those funds as a trustee. First condition. Second condition, company should not pay any interest. Company should not pay any interest. If these 2 conditions are satisfied, then also it is not deposit. Next one, advances for commercial transactions, simply business advances. Advances for goods or services. Suppose you are taking my classes. So my classes available for 6 months. For example, one time payment, 6 months classes are available. Classes are available for 6 months. Now this is a period within 365 days. So amount received by me, suppose if I am a company, amount received by a company for provision of services which shall be adjusted within 365 days, then it is not treated as deposit. Suppose I am providing classes for a duration of 24 months. 24 months. Now I am collecting the amount. Now I am collecting the fees. So if you see 24 months means it exceeds 365 days. 365 days, then it become a deposit. So here the point is adjustment should be done within 365 days. Next one, any advance involved in legal proceedings. So there is a dispute between the parties and matter went to the court, then 365 day limit does not apply. until court settles that dispute, until court resolves the dispute, this 365-day rule is not applicable. Once court resolve the dispute, then we need to check 365-day limit. Advance for immovable property. Suppose my company GMR, it planned for ventures, it is constructing the buildings, and you deposited money against purchase of immovable property, and I promise to deliver you immovable property. Now this advance is also not considered as deposit. Security deposit for goods or services. Suppose you take Geo subscription, any deposit received as security for fulfilling a contract related to the goods or services, it is also not a deposit. So Geo company receiving a security deposit from its customers is not a deposit. Advance for long-term projects. Suppose my company is doing some government projects, or my company is doing some long-term projects for government or maybe for private individuals. Now any advances received for financing long-term projects involving supply of capital goods, that is also not considered as deposit. Advance for AMC contracts, extended warranties, annual maintenance contracts. So here you have to check this limit. The limit is, what is the industrial standard practice? Suppose industrial standard practice is 3 years and law allows 5 years. 3 or 5, whichever is shorter, we need to consider. So 3 years we need to consider. Suppose industry practice is 6 years. 6 years or 5 years, whichever is shorter, means you have to go with act, this time 5 years. This time 5 years. So here you need to remember two timelines, industry standing practice and industry standard business practice, and 5 years, whichever is shorter. Next one, sectorial permitted advances, NSDL, CDSL, receiving amounts from the companies for converting material form of securities into demat form of securities. So sectorial permitted advances are also not considered as deposits. Advance for publication subscriptions, business magazines. So those advances are also not considered as deposits. Now coming to the points, 1, 2 and 4. 1, 2 and 4, that is goods or services, immovable property, long-term projects. If they become refundable, then refund them within 15 days, then it is not considered as deposit. If not refunded within 15 days, then it will be considered as deposit. It will be considered as deposit and interest will be payable. Loan from promoter. For example, one company C Limited applied for a bank loan. SBI, rupees 20 crores. SBI agreed to finance C Limited 20 crores on a condition that the promoters of C Limited should deposit 25% of the project. So suppose project 25 crores. For example, 25 crores. SBI agreed to finance this project 80% on a condition balance 20% should be brought by promoters. Now promoter is giving loan to C Limited, unsecured loan of 5 crores, and SBI is giving a loan of 20 crores. So project started, repayment also started. So now you need to check what is the complete repayment to SBI. When complete repayment happened. Suppose for example, on 1st January 2028, company C Limited paid last installment to SBI. So after payment of last installment, balance due is 0. Now up to 1st January 2028, promoter unsecured loan is not a deposit. From 2nd January 2028 onwards, once loan balance became 0, immediately promoter unsecured loan will be considered as a deposit. That means repay to SBI as well as promoter simultaneously. Both repayments should be done simultaneously. Next one, Nidhi company. Amount received by Nidhi company is exempted deposit. Chit fund companies also collecting any amount from its customers, not deposit. Collective investment scheme. Amount received under collective investment scheme in compliance with SEBI regulations, not deposit. Startup companies receiving minimum 25 lakhs under a single transaction, for which company issued a convertible note. Either convert them into equity or repay the money within 10 years. Two conditions to be satisfied. Single transaction value 25 lakhs or more, and repayment should be done within 10 years, or at least convert them into equity within 10 years. So then also it is not considered as a deposit. REIT, IFIT. Amount received from alternate investment funds, venture capital funds, infrastructure investment trust, real estate investment trust, mutual funds. So you all know mutual funds. Suppose a public deposited their money with mutual funds. Say for example, Aditya Birla mutual funds. Aditya Birla mutual funds financed some companies. Now, any amount received from mutual fund companies, in the form of loans or in the form of deposit, but they are not considered as deposits. They are exempted deposits. So, total exempted deposits you can see here. Even in my handwritten notes also you can see here. So, simply shortcut, my compulsory at least one question comes from exempted deposits. So that's what. Government receipts exempted, foreign sources not treated as deposit, financial institutions, amounts received from financial institutions not treated as deposit, banks not considered as deposit, loans from banks, loan from other companies not considered as deposit, amounts received from AIF, REIT, IIT, venture capital funds, mutual funds not considered as not not considered as deposit. Next, so these are the sources. Next one, recipients. Nidhi company. Any deposit received by Nidhi company is not considered as deposit. Chit fund companies, trust, collective investment scheme. Next one, securities. Securities separate tab is there. You can see here securities. Issue of commercial papers. Any amount received against issue of commercial papers not considered as deposit. Security application money pending for allotment should not be adjusted if refunded within 15 days after expiry of 60 days. If refunded within 15 days after expiry of 60 days of receipt of money, not considered as deposit. Secured debenture, convertible debenture, listed debenture, not a deposit. Convertible note by a startup company collecting amount minimum 25 lakhs under a single tranche where repayment or conversion should happen within 10 years. Then also it is not considered as deposit. Next one, amounts received from the following persons. Employee up to annual salary. Non-interest bearing security deposit is not considered as deposit. Directors, with respect to private company, relatives of directors are also considered. So here, subject to declaration and disclosure in board report, it is not considered as deposit. Promoter loans which are unsecured just because of lending financial institutions stipulation, then also not considered as deposit. Next one, business advances. If refundable, refund within 15 days. Or else, let's see whether the amount business advance falling under the following categories or not. If falling under following categories, then also not considered as deposit. First one, trade advances to be adjusted within 365 days. Immobile property advance, security deposits, long-term project advances, AMC EWC advances, sectorial regulatory advances, subscription for publication. So these amounts are not considered as deposits. Over exempted deposits over. Next, deposit types. Deposits are of two types. Secured deposits, unsecured deposits. Secured deposits, unsecured deposits. Secured deposits, fully secured by creating charge on tangible assets. Suppose the amount of deposits company is accepting, say for example 300 crores, and interest payable over a period of time is, say for example 30 crores. Now principal amount 300, interest 30, total 330 crores, right? So the company should create a charge on tangible assets. The market value of tangible assets should cover not only principal but also interest. So market value of tangible assets, say for example 450 crores, which covers both principal and interest. So therefore this deposit is treated as secure deposit. Suppose market value of asset we are providing as a security to the deposit holders is 300 crores. Sir, principal amount covered? No sir, but interest amount not covered. Even 1 rupee pending also, even 1 rupee shortage is there, then it is not treated as secure deposit, it is unsecured deposit. Getting my point? So market value should cover principal, interest, then secure deposit, otherwise or unsecured deposit. Next one, unsecured deposits, partially or no security made. In case of unsecured deposits, express disclosure in circular is compulsory. Next one, depositor. For section 73 companies, depositor can be any member, whereas for 76 company, section 76 company, even a member or a non-member can be depositor. For 76 company means what, sir? It is an eligible company. Eligible company means it should satisfy two conditions. Condition number one, it should be a public company. Condition number two, net worth. Its net worth at least 100 crores or turnover at least 500 crores. Condition one, pakka. No rebate, no discount. Condition 2, you have to fulfill any one of the following sub conditions. One is net worth at least 100 crores, turnover at least 500 crores. Any one condition, any one sub condition satisfied, and if it is a public company, then it is an eligible company. Eligible company can accept deposits from both public as well as members. Next one, tenure of the deposits. Tenure of the deposits. If you go with lawmaker language, not permitted to accept renew deposits which are repayable on demand. So demand deposits not allowed. Tenure less than 6 months also not allowed. Tenure more than 36 months also not allowed. That means what? Minimum tenure of deposits is 6 months. Maximum tenure of deposits is 36 months. 6 to 36. No sir, my requirement is to finance very short term requirements sir. Very short term requirements, 6 months not required sir, very short term required sir, very short term purpose sir. Then tenure should be at least 3 months. Below 3 not possible. Actually general rule, below 6 not possible, but there is an exception. Exception is 3 to 6 months also allowed, but amount shall not exceed 10% of paid up share capital plus free reserves plus securities premium. Getting the point? So maximum amount to finance very short term requirements, that is less than 6 months but at least 3 months, is 10% of paid up share capital plus free reserves plus securities premium. Next one, prohibition on acceptance of deposits. Generally companies are not allowed to accept deposits. Of course, this rule is not applicable to banking company, NBFC, housing finance companies and specified companies. These can accept deposits subject to RBI guidelines. For them, Companies Act is not applicable. So here I am talking about a company which is not a banking company, not NBFC company, not housing finance company. Let's see. So conditions for accepting deposits from members. Ordinary resolution at general meeting is compulsory and you need to issue a circular. Circular in which form? DPT 1. Published in 2 newspapers. Validity of this circular, for example, for 2026-27 you issued a circular. Now this circular will be valid till the expiry of 6 months from the closure of financial year. Financial year closure date means 31st March 27. To this add 6 months, that will be 30th September 27. Or AGM date. Suppose AGM was conducted on 15th September 2027, or due date of AGM. Majority cases due date of AGM will be 30th September only. Now out of these 3 dates, whichever is earlier you need to consider. Here whichever is earlier means 15 September 27. So circular issued for financial year 26-27 shall be valid till 15 September 27. Getting the point? Next one, copy of circular should be filed with ROC within 30 days before issue to the members. So you decided to issue it circular to the members. Now go back 30 days. So it should not be older than 30 days. Simply today I am filing a copy with ROC. Within 30 days I need to issue to the members. Next one, deposit repayment reserve shall be created by 30th April. For which amounts are? For the amounts maturing following financial year. In one attempt a problem was asked on this point. Suppose 26-27 deposits, the maturing amount, deposits maturing for the financial year 26-27 is 15 crores, and 27-28 deposits maturing is 20 crores. Now by 30th April 2026, how much DRR I should create, sir? DRR is 20% of deposits maturing following financial year. That means not current financial year. Current financial year DRR you already created last year. So following year, that means 27-28. How much? 20 crores into 20%. That means 4 crores DRR you need to create by 30th April 26. And this DRR shall not be utilized for other purposes. Only for repayment of deposits only you should utilize. Certification as to no default. So company which has not committed any default under this chapter can accept deposits. Suppose sir, already default happened sir. Now rectify the default. Rectify the default. Yes sir, rectified sir. Add 5 years to that financial year. After 5 years to that financial year, you can accept new deposits. Next one, provision for security, creation of charge on its assets. So next one, the circular should contain following particulars: financial position of the company, credit rating, number of depositors, total amount outstanding as on date. And next, company should repay deposits along with interest as per the terms and conditions. DRR shall be utilized only for repayment of the deposits. Now these conditions, these conditions, creation of DRR, issue of circular, filing with ROC, a certification as to no default, simply these 5 conditions, if you see, these 5 conditions you see, issuance of circular, circular copy of circular filed with ROC, DRR, certification as to no default. So these conditions are not applicable if your company is falling in this category. So which category? Private companies, which is accepting deposits up to 100% of paid up share capital plus financial free reserves plus securities premium. A startup private company up to 5 years from incorporation, no need to comply with A to E conditions. And a private company which satisfy 3 conditions. What are those 3 conditions? This private company is neither a substitute nor, this private company is neither a subsidiary nor an associate company to other companies. And the total borrowings in this private company is less than, it's not less than or equal to, it's less than twice of the paid up share capital or 50 crores, whichever is less. And with respect to these borrowings, company should not committed any default in repayment. So a private company, simply a private company falling in these 3 categories. First one, up to 100% of paid up share capital, free reserves plus securities premium, accepting deposits. A startup up to 5 years, and a private company which satisfy 3 conditions, following 3 conditions. Then such private companies are not required to comply with, resolutions, issuance of circular, copy of circular to be filed with ROC, deposit repayment reserve, certification as to no default. Getting the point? Next one. But however, these companies are required to file DPT3 with ROC. By 30th June of every financial year. Next, coming to the limits of deposits. So to what extent I can accept deposits? Amount of deposits from the members up to 35% of paid up share capital plus free reserves plus securities premium. But this limit is not applicable to 2 companies, IFSC public companies and all private companies, including IFSC private company. So these 2 companies, IFSC public companies and private companies, can go up to 100%. For them 35% is not applicable. So simply 35% rule is applicable to ineligible public company. What? Ineligible public company, they can accept deposits from members up to 35%. See here, this limits includes old deposits also, no sir? Yes ma. That means already accepted deposits, existing deposits plus new deposits. A limit of 35%. Suppose say for example, paid up share capital 100 crores. Free reserves 100 crores. Securities premium 100 crores. Total how much? 300 crores. 300 into 35% means 105 crores. Correct? Already company accepted deposits last year some 72 crores. Now in this year, how much amount company can accept freshly, 105 minus 72, that means 33 crores. Yeah, 33 crores it can accept as new deposits in the current financial year. Next one. And this maximum limit of 35% or 100% is also not applicable to following private companies. One is startup up to 10 years from incorporation date. A startup company up to 10 years from incorporation date, they can accept deposits without any limit. Next one, a private company which satisfy 3 conditions, neither subsidiary nor associate, total borrowings less than twice of the paid up share capital or 50 crores, whichever is less, no default in repayment of subsisting borrowings. So private company falling in category 1 or category 2 can accept deposits without any limits. So 100% is not applicable to them. Next one. Yeah. Next one is repayment of old deposits. So section 73 over 74, repayment of old deposits, that means deposits accepted before commencement of the act. So first you need to communicate with ROC about old deposits, that means accepted under Old Companies Act 1956. So first ROC filing, these are the deposits I accepted under Old Companies Act. It should be filed within 3 months of commencement, that means 30th June 2014. and it should be repaid. Old deposits should be repaid within 3 years of commencement of this section. So 1st April 2014 this section came into force. So from this date onwards, within 3 years repayment should be done. Or what is the original due date for repayment? Out of these two, whichever is earlier, that is the due date for repayment of old deposits. If you want extension of time, get approval from NCLT. And if you commit any default with respect to repayment, with respect to filings, then the punishment to the company is 1 CR to 10 CR fine, officer in default, imprisonment up to 7 years, or 25 lakhs to 2 crores, or both. So this is with respect to old deposits repayment. So DPT1 is for circular, format of circular. DPT3, filing with ROC, return of deposits. DPT2, deposit trust deed. Next one. So section numbers also you can see here, 73, 74, 75, 76, 76A. And if you go with the rules in deposits chapter, ceiling on interest rate and brokerage rate, maximum rate prescribed by RBI, application form for acceptance of deposits for renewal. Here in deposits, like banks, there is no auto renewal concept. Once maturity date came, it should be repaid. Suppose the fellows are not coming to the company, the fellows are not filing an application for repayments, then keep it aside, wait for 7 years, then transfer it to IEPF account. Okay, auto renewal concept is not there. So for renewal also application form is compulsory. Next one, and there should be a declaration from the depositor. The declaration is deposits are not out of borrowed funds, they are out of savings only. Next one, maximum deposit receipt can be issued with the names not exceeding 3. So joint depositors can be up to 3 in number. Deposit receipt shall be issued within 21 days from receipt of money. And if company is not repaying deposits as per the terms, for the overdue period, company has to pay penal interest 18% per annum. 18% per annum. So punishment to comply with punishment for contravention of rules. If you are not following the rules, then company officer in default, common fine 5,000 rupees plus 500 per day of contravention. That is all about rules. Next, 76, acceptance of deposits from the public. Only eligible companies can accept deposits from the public. So public company, here eligible company means, I already told you, eligible company means it should be a public company with net worth 100 crores or more, or turnover 500 crores or more. Special resolution is compulsory. Of course, if existing loans plus proposed deposits, if existing loans and proposed deposits up to 100% of, it's not 10%, it's 100% of, 100% of paid up share capital plus free reserves plus securities premium, then OR is enough. See, this section 180 subsection 1 clause C speaks about borrowing powers of the company. Suppose existing total loans, not deposits, existing total loans 100 CR, proposed deposits 50 CR. Now compare it with paid up share capital, free reserves, securities premium. Paid up share capital 50 crores, free reserves 60 crores, securities premium 40 crores. Total how much? 150. And existing loans plus new deposits 150. Within the limit, OR is enough. Exceeding the limit, special resolution is required. Next one. Every year during the tenure of deposits, company should obtain a credit rating from credit reporting agencies. If company is accepting security deposits, charge should be created on tangible assets, not intangible. Only tangible assets you have to consider for creating charge if deposits are secured. Next one, depositor trustee. Before appointing any person as depositor trustee, so written consent from the proposed depositor trustee should be obtained. Next one, disclosures in the advertisement. So who the depositor trustee? Depositor trust deed should be executed 7 days before issuing the circular. 7 days before issuing the circular, depositor trust deed should be executed in DPT2, and following disqualifications should not be there. A depositor trustee should not have following disqualifications. First one, our company, our associate company, subsidiary company, holding company, director, KMP, officer, employee. So these 4 companies and 4 individuals are disqualified. And relatives of these people. 1 second, let me show my material. Yeah. So here you can see D KDP, remember like this, KDP. So what is this KDP? KMP, director. Next one, promoter, simply officer, employee, a depositor, KDOED of cash companies disqualified. Related to any person mentioned in A, relatives of the above mentioned persons also disqualified. So simply on the grounds of independence, director, KMP, officer, employee, depositor also disqualified. Relatives of these people are also disqualified. Debtor, any debtor to these 5 companies, cash means company, associate company, subsidiary company, next one holding company, plus subsidiary of holding company. So these 5 companies debtors also disqualified. And the person is, if he is having any significant financial relationship with the company, then also disqualified. Surety for deposits or interest on deposits, surety is also disqualified. So this disqualification should not be there at the time of appointment as well as during the tenure as a depositor trustee. Next one, removal of depositor trustee. Consent of all directors who present at the meeting. Consent of all directors who present at the meeting. Suppose there are 15 directors, but only 10 directors attended the meeting. So 10 directors should vote in favor for removal of the depositor trustee. Then only that resolution is valid. If company is having independent directors, at least one independent director should attend that meeting, and he should also cast vote in favor of removal of depositor trustee. Then only removal will be valid. Next one ma. So these are the terms which I used in the chapter, abbreviations you can see here. Next one, maximum amount of deposits, you can see eligible company up to 10% from members, up to 25% from public, whereas eligible government company 35% either from members or non-members. So bifurcation is not there, from members 10% only, such bifurcation is not there. For example ma, paid up share capital of the company is 100 crores. Next one, free reserves 100 crores. Next, securities premium also 100 crores. So total how much? 300 crores. 300 crores, 10%, that means 30 crores you can take from members. 25%, that means 75 crores you can take from public, that is non-members. Next one, punishment for contravention of 73(2) or 76. So for company, minimum 1 CR or twice of the amount of deposits accepted, whichever is lower. Maximum 10 CR. Whereas for officer in default, imprisonment and fine. Imprisonment up to 7 years and fine minimum 25 lakhs, maximum 2 crores. So that is section 76A, punishment. Next one, register of deposits. So entries in the register shall be updated within 7 days from issue of the receipt. See here, when you received money, from the date of receipt of money, within 21 days, issue deposit receipt. Once you issue deposit receipt, within next 7 days, update the register. And who will verify the entries? Director or secretary or authorized officer. And these registers shall be preserved up to 8 years from the date of latest entry. That means, in case of repayment, you will record the entry. That would be the last entry. From the last entry onwards, 8 years you need to preserve registers. For premature repayment, 1% rate cut. Suppose even premature repayment, that that means cancellation of deposit before maturity date. That cancellation is not allowed less than 6 months. Suppose Jan 26 you made a deposit. May 26 you want to cancel the deposit. No, not possible. Minimum 6 months you have to hold the deposit. Suppose sir, the deposit is for 1 year sir. The deposit is for 1 year and I want to cancel the deposit after completion of 8 months sir. After completion of 8 months. Okay, then for this 8 months you will be paid interest. That too at not normal rate of interest. 1% rate cut will be there. Suppose normal rate is 8%. Normal rate is 8%. You made a deposit of 1 lakh. Now 1 lakh into 8 months only, you will get deposit interest only for 8 months, not for complete year. 8 months divided by 12 months into normal rate is 8, but for you 1% rate cut will be there. 1% rate cut will be there. So 1 lakh into 8 months into 7%. So 1 lakh into 7% into 8 divided by 12, so that would be 4667. 4667, that will be the interest paid. In recent attempt itself, the same question came. Next one, but if you are repaying deposits prematurely due to reduction of limits, unfortunately paid up share capital plus free reserves plus securities premium limit fallen because of losses, the limit came down. As a result, the deposit should also be within the limit of 35%. Now you want to repay some deposits prematurely, in that case rate cut is not there. Next one, emergency situations also rate cut is not there. Premature closure to earn high interest. Premature closure to earn high interest. Suppose you made a deposit in the year 2026 at the rate of 8%. In the year 2027, company increased the rate of interest to 13%, for example, 13%. You made a deposit for 3 years. For example, you made a deposit for how many years? 3 years. 1 year completed. 1 year completed. Now you want to cancel this deposit so that you can reinvest that money to get high rate of interest. So here no need of premature closure. Just ask the company, and if your new deposit, that means new deposit tenure, imagine it's a cancellation and making a fresh deposit, imagine like that. So fresh deposit, if it is for a minimum of unexpired tenure, how much tenure ma? Minimum of unexpired tenure. If it is running for minimum of unexpired tenure, then you are entitled to high rate of interest. You are entitled to high rate of interest. So year 1 completed, year 1 you claimed interest at the rate of 8%, and for the balance 2 years if you want to claim 13%, the fresh deposit, imagination, like the old deposit you are cancelling and making a fresh deposit. So that fresh deposit tenure should not be less than unexpired tenure. It should be equal to, or it should be greater than unexpired tenure. Next one, in the entire chapter, if director's intention is to deceive public, income tax authorities, depositors, then the candidate will get punishment under section 447. So this is all about deposits. So any doubts you can ask me. PDF link not opening, sir. But try once ma, that is a new link only. You can open it. So yes. Oh. I'll see after class, but so that link is working. PDF link asking for your access. Oh God. I'll keep it under free access ma. It is asking access. Acha. So just let me check once. Manage access. Change. Anyone with the link. Yeah, just now updated. Try to access the link once. Is it working or not? Let me confirm once. In the recent May examinations, you can see one MCQ, there is no correct option itself. Sorry, there is no correct option, it seems. Okay. So confirm me whether link is working or not. Someone try to open the link and confirm me once it's working. Fine. Share capital and day 2 topics were updated in that link. Prospectus and incorporation of company, just give me a little time. By day end I will update those PDF copies. I'll update and I'll upload them. I'll update and I'll upload them. So okay. So premature payment of deposits, you can see here in the question last attempt. This question was tested in the last attempt. So rate of interest, if you see, for 12 months 7%, 24 months 8%, 36 months 9%. And here R made a deposit for 36 months, and he want to take those deposits after the expiry of 6 months but before date of maturity. Okay, on 30th November itself, on 30th November, if you see 2022, 2023 March 1 year, 2024 by March 2 years completed, and April to November means 7 months over, not 7 months, 8 months, April to September, October, November, so 8 months over. So 2 years 8 months, the tenure is 2 years 8 months. So the provision is telling you, if the period of deposits is greater than 6 months, then you have to consider it as a full year, not 6 months, greater than 6 months, it's 6 months or more. If the period of holding, if the period of deposits is 6 months or more, consider it as one complete year. Okay, so 2 years 8 months means 3 years. 2 years 8 months means you have to consider it as 3 years. For 3 years, what is applicable rate of interest? 9%. But 9% will not be paid. 9% will not be paid for 36 months since deposit was only for 32 months. Here in the solutions you can see, in the suggested answers you can see. So 2 years 8 months means 32 months only deposit holding period is there. And for the 32 months also 9% rate of interest is not applicable, 1% rate cut will be there. So 8%. Here you can see 6 months or more to be considered as one full year. Less than 6 months should be ignored. Here actual period run is 2 years 6 months. So total 3 years. But 3 years means which rate is applicable. For calculating which rate applicability, we are checking it. 2 year 8 months means 3 years. 3 years rate is 9%. Now from 9% deduct 1%. So 8%. Okay, fine. So chalo, next chapter is charges. Next chapter is registration of charges. Let's continue with the next topic, registration of charges. Very small topic out of 11 chapters in the Companies Act. This is the smallest chapter, of course after preliminary only. Okay, fine. So registration of charges, section 77 to 87. So comparison of charges. Yes, here we are having two types of charges, fixed charge, floating charge. Before that, what is a charge? Company creating any interest or lien on its assets or properties or undertakings as a security which includes mortgage in favor of other person, we call it as charge. Simply, on its assets any lien or interest was created in favor of other party as a security, we call it as charge, and charge includes mortgage. We are having two types of charges, fixed charge, floating charge. Fixed charge on specific assets, permanent assets, whereas charge on fluctuating nature, changing nature, say for example inventories, book debts, inventory, book debts, land and building, fixed charge, inventory, book debts, floating charge. Fixed charge is permanent and identifiable at the time of creation, whereas floating charge is fluctuating. It covers not only present assets but also future assets. Fixed charge is created by mortgage or deposit of title deeds, whereas floating charge is created by hypothecation. Fixed charge, you can use the asset but you cannot sell it without charge holder consent. Whereas floating charge, you can sell them in the ordinary course of business. Crystallization not applicable to fixed charge, crystallization is applicable to floating charge. The process of converting floating charge to fixed charge is nothing but crystallization. Sir, why crystallization happens? Breach of terms and conditions. Say for example, debt equity ratio should always be less than 2:1, suddenly crossed. Or continuous non-repayment of interest, continuous non-payment of interest for 3 months. Or company goes into liquidation, company ceases to continue its business operations, then the floating charge will be crystallized into fixed charge. What is the difference, sir? In floating charge, you can deal with the assets, you can procure new assets, you can sell the assets. Whereas fixed charge, you can use them but you cannot sell them. Charge holder will get control over the assets. Next, section 77. The soul of this chapter is section 77. Whenever company creates charge on its tangible assets or intangible assets, forget about the nature, tangible or intangible, in favor of any charge holder, it is the duty of company to register charge with ROC. Sir, what is the time limit, sir? So here charges are of two types, old and new. Charges created before 2nd November, charges created on or after 2nd November. On or after 2nd November 2018, new charges, the normal time is 30 days. Here payment of normal fees enough. If it is 30 to 60 days, if 30 days is over, next 30 days, if you want next 30 days, then you need to pay additional fees. Sir, first normal time limit 30 days, I forgot, sir. Next 30 days also, I forgot, sir. Then what is the remedy? The remedy is you will be given further another 60 days. That means you will have total 120 days from the date of creation of charge. Before this date, register the charge by paying ad valorem fees. In GST, you all know ad valorem means proportionate fees, correct? So 3 time limits, normal time limit 30 days, additional time limit another 30 plus 30, 60, further additional time period of 60 days. So total 30 plus 60, total 120. First 30 normal day fees, second 30 additional fees, third 60, simply the third time limit 60, you have to pay ad valorem fees. Old charges, 30 days or 300 days. Right now this is inappropriate. Almost 8 years completed, right? 8 years completed, irrelevant. Okay. Once you register charge with ROC, once you file particulars with ROC, ROC will issue certificate of registration of charge. If company fails to register charge within 30 days, then charge holder can register the charge. Charge holder can register the charge. Sir, why charge holder will register the charge? Are a charge holder, to call him as secured creditor under Companies Act 2013, his charge should be registered. His charge should be registered under this chapter, or else he will be treated as unsecured creditor. He can't get any privileges like a secured creditor. Section 77 is not applicable to charges by the banks in favor of RBI. Every day they will take loans from RBI. For them, separate rules are applicable. Section 77 is not applicable. For belated filing, a director or CS should file a declaration with authorities telling that there will be no adverse impact on intervening creditors from the date of creation of charge and date of registration of charge. Date of creation of charge, date of registration of charge. During this period, any new creditors came to the company, their interest was not affected, sir. Their interest is also safe. And sir, charge documents. How charge documents will be verified, or who will verify the charge documents? Here you need to see property located outside Indiana or property located in Indiana. Suppose property located outside India, it should be verified under common seal. Charge instrument, simply say for example mortgage deed. Verified under common seal, or director or company secretary or any person interested in the property, maybe a co-owner, charge holder authorized officer. Whereas in India, director of the company or company secretary, common seal is there, fix it, or else not required. Next on behalf of charge holder, authorized officer will verify the charge instruments. Consequences of non-registration of charge. If charge is not registered, charge becomes void. Creditor will be considered as unsecured creditor. Debt is valid. Debt is not void, it is valid. Security over charged asset is lost. Simply the privilege is lost. loss of priority. If another charge is registered before registration of this charge, then that another charge holder gains precedence over unregistered charge. For example, company K Limited created charge in favor of SBI in the month of April, but registered with ROC in the month of June. Meanwhile, K Limited created charge with Axis Bank in the month of May, and the same was registered with ROC in the month of May itself. So here date of creation of charge is irrelevant. Date of registration of charge with ROC is important. Whose charge was registered with ROC first? Axis Bank. Axis Bank charge was registered first in the month of May. So that's it. They gain priority when compared with SBI. Yeah, fine. Okay. So whose charge was registered first with ROC is important. Whose charge was created first is not important. Suppose SBI charge was created in the month of April, but this is not important. Date of registration. Which charge registered with ROC first? Axis Bank charge was registered with ROC first. So that's it. Yeah, that's it. Axis Bank gains precedence over SBI. Next, 78. Registration of charge by charge holder. If company fails to register charge within normal time limit of 30 days, then charge holder file documents with ROC. ROC will give information to company. If there is no objection from company, within 14 days of notice, if there is no information from company, then ROC shall register the charge and issue certificate of registration. And whatever fees paid by the charge holder to ROC, that fees charge holder can recover from company. And ROC will reject charge holder application in following two cases. Suppose company understood its mistake, company accepted its mistake, and company is filing the form with ROC. Sorry ROC, it's my mistake. Or if there is any reason not to register the charge, if any sufficient cause was shown, in these two cases, ROC rejects the application of charge holder. Is it clear? Next one, modification of charge. Section 77 is applicable to certain matters like, company acquiring any property. Suppose Reliance Industry Limited created charge on its factory in favor of SBI. Now later, Adani group of companies, Adani Enterprises acquired this factory. Now it's the duty of Adani Enterprises to register the charge with ROC. That means old charge by Reliance Industry will be closed, whereas new charge by Adani Enterprises will be opened. So company acquiring charged property should file a form with ROC. Modification in the terms and conditions, repayment period change, rate of interest change by bank, not RBI rate, bank changed rate of interest, or bank increased loan amount, or bank has been changed. Suppose loan takeover. So we went from SBI to Axis Bank, for example. So any changes, the changes shall be recorded with ROC. So simply register the changes with ROC. Next one, from the date of registration of charge. It is doctrine of constructive notice is applicable. From the date of registration of charge, doctrine of constructive notice is applicable. Simply date of registration equal to date of notice. So public should aware of that company created a charge on its assets. Tomorrow if you acquire charged property and you cannot tell like this, I don't know about the existence of charges, so I'm not liable to the charge holder. No, it is not applicable. Simply doctrine of constructive notice. Next one, register of charges. Register means a book. Register to be maintained by ROC, to be maintained by company. What is the difference, sir? ROC maintenance of registers contains charges of every company falling in its jurisdiction, open for inspection upon payment of fees. MCA portal is a register. Whereas company should maintain a register at its registered office. All the charges, whether fixed or floating up, plus copy of charge instruments. And these registers should contain entries. Who will record these entries? Director, CS, authorized person shall record the entries in this register. Inspection is allowed only during business hours by the members creators, 0 fees, and outsiders a prescribed fees. How long we need to preserve, sir? Registers permanently. There is no option permanently. But charge instruments, mortgage documents, for example, up to 8 years. Sorry, minimum 8 years from satisfaction. It's not about taking loan. It's about repayment. When you repaid the loan, so from the date of satisfaction onwards, up to 8 years, you have to maintain these instruments. Coming to the registers, permanently till liquidation of the company. Next, section 82, 83 ma. Section 82, 83 are nothing but satisfaction of charges. Section 82, whenever company repays the loan amount or whenever company satisfies the charge, within 30 days of satisfaction of charge, communicate the same with ROC. Normal time period of completed, sir, I forgot. Then extended time limit is there, 300 days. That means extra how many days we will get? 270 days we will get. Extra 270 days we will get. Okay now. So once ROC receives this intimation of satisfaction, it will forward a copy to charge holder and it will wait for 14 days. Is charge holder satisfied? No, is charge satisfied or not? Confirmation. Of course, this confirmation is not required if a no objection certificate is issued by charge holder. If charge holder already issued a no objection certificate and company attached no objection certificate in that form, then ROC will not give any information to charge holder. So once all the formalities are completed, then ROC shall issue certificate of satisfaction and it will record the entries in the register and maintained under section 81. Next one, 83. 83. Powers of ROC to make entries of satisfaction and release in the absence of intimation from the company. Suppose SBI, Reliance Industry Limited, charged created a charge in favor of one property. Sorry. 1 second. Yeah. Reliance Industry Limited created charge on its asset in favor of State Bank of India. Reliance Industry Limited paid the loan amount but forgot to register satisfaction of charge. Or this asset was taken over by another company, Adani Enterprises, and Reliance Industry Limited forgot to register satisfaction of charge with ROC. In these cases, any interested person or affected person just giving a notice to ROC upon making an inquiry, ROC shall register satisfaction of charge on its own motion. Evidence proves that debt secured by charge is wholly or partially satisfied. Part of property is released from the charge. Then ROC powers are independent, not affected by company's failure to notify. See, so here company will not wait like under section 81. Under section 82. Under section 82, what happened? You tell me. Company has to file satisfaction of charge with ROC, correct? Then only ROC will proceed with registration. But under section 83, so here company, even though there is no reply from company, no response from the company, ROC had independent powers to register satisfaction of charge. But these are the situations, like Adani Enterprises gave a notice to ROC, sir, that property already free from charge, sir. ROC will register it. Intimation to affected parties within 30 days of making entry, and finally it will issue satisfaction of charge certificate of registration of satisfaction of charge. Part of the property released means, for example, observe carefully, just a small example. Suppose company C Limited created charge in favor of State Bank of India, two properties, property 1, property 2, loan 100 crores loan 100 crores, property 1 value is 70 crores, property 2 value is 30 crores. So two properties covering value of 100 crores, and C Limited created a charge in favor of SBI on these assets, loan amount also 100 crores. Suppose C Limited repaid 40 crores. C Limited repaid 40 crores. Now if you observe, repayment of 40 crores means this property number 2 no more to continue in this charge. So part of the property can be released. Now charge in favor of SBI against property 2 can be just 1 second. So what ROC can do? So property number 2, charge on property 2 in favor of SBI, ROC can record satisfaction of charge. So that is all about section 83. Next one, 84. Intimation of appointment of receiver or manager. Charge holder appointing any person, say for example manager or official receiver, to manage charged property. To manage charged property. At the time of both appointment as well as removal, so it is a duty of charge holder to communicate with ROC within 30 days. Within 30 days of appointment or within 30 days of order to appoint manager or official receiver to manage the charged property. So ROC registered the particulars in the register of charges. Cessation also, you need to notify ROC as well as company. Next 86, contravention, company punishment 5 lakhs, officer in default punishment 50,000. For fraud 447 is the applicable punishment. Yeah. Next one, rectification by central government in register of charges. So powers of central government section 87 is nothing but powers of central government. In 2 areas central government has powers under this chapter. One, omission to give intimation of satisfaction of charge in time, that is 300 days over, sir. Charge was satisfied, 300 days time completed, we forgot to register satisfaction of charge with ROC. Or if there is any misstatements in the previous filings as well as registers, then communicate the same with central government. If central government is of assumption that if central government is satisfied that default was just accidental, not intentional, no negative impact on the creditors, no negative impact on the shareholders, then upon filing an application by the company or interested person, central government will pass an order for rectification. Order for rectification of errors, first thing. Second thing, may order for registration of satisfaction of charge. Registration of satisfaction of charge. And relevant forms, you can see here relevant forms CHG 1 to CHG 9. Just give one time reading, that's it. That's all about registration of charges. Sir, does the class continues to other laws also? See, all the 15 chapters, I'll revise it, don't worry. And today afternoon also we will have one more session, 3 to 6. All the 15 chapters I'll do marathon using this handwritten notes. Okay, na? See, my agenda is very simple, day before examination 12 hours time. You will have 24 hours time for revision, but for concept revision 12 hours, for question bank solving another 12 hours. That is my agenda. So you need to be very cool, calm, and you should be in comfortable position a day before examination. That's why I'm doing this. Next thing, sir, is this marathon sufficient for scoring good marks? Let me tell you disclaimer one more time. This marathon is not a substitute to the classroom sessions. There you will get in-depth knowledge. This marathon is all about revising the concepts very quickly. We are just 15 days before examination. Last 5 days, anyhow you will prepare accounts only. So before that 5 days, if you are able to sit another 5 days, if you are able to sit 5 days for law, so with just 12 hours of this marathon, able to revise the concepts very quickly, say for example another 24 or 36 hours. So in the 5 days span, watching this marathon, revising the concepts will be over. So last 5 days survival plan, I will do it today or tomorrow. The same will be uploaded, don't worry. So main agenda of this marathon is, sir, we had a problem in revising hundreds of the pages. So we already prepared the subject, sir, but we had a difficulty in revising the subject. How to revise? We are not getting it, sir. For you, this marathon is a solution. Evening one more session will be there, 3 to 6. In 3 to 6 agenda is dividends chapter, accounts of companies, audit and auditors, general clauses act. So these four topics evening session, and balance chapters, that is uh, interpretation of statutes, FEMA, LLP, and then preliminary topic, that is tomorrow evening 6 to 9. Okay, so now the next topic is management and administration. Once MGT is over, I'll quickly revise share capital and debentures topic also. Quickly, just 45 or 50 minutes. Quickly I will revise share capital and debentures one more time. So few changes I have did. So those two records are already there in this link. Probably end of the day I'll upload day 3. Sorry, once this marathon is over, I'll upload day 3 handwritten notebook, as well as at the end of the day I'll upload prospectus and incorporation of companies also. Okay, fine. Chalo, we'll start another chapter, management and administration. It looks big chapter. So total 35 sections are there. Nothing to worry. Handwritten notes is of just 12 pages. Hardly 1 hour 15 minutes to 1.5 hours. That's it. Maximum 1 hour 15 minutes. If it is crossing, max 130. That's it. Okay. So, let's continue with the next chapter, management and administration, section 88 to section 122. So you can remember section numbers, the chart was given here itself. Part 1, registers and returns, 88 to 85. It's the duty of company to maintain registers for members, 88, beneficial owners, 89, significant beneficial owners, 90. And these registers can be closed, 91. Once registers topic over, then company has to file returns. Two returns. One is annual returns, section 92, changes in promoter stake, 93. And these registers and returns are available for inspection, 94. They will act as evidence under this Companies Act 2013, section 95, over one part. Second part, general meetings, types of general meeting. Yes, AGM, EGM. AGM by company 96, NCLT calling for AGM 97, NCLT calling AGM 98, default of 96, 97, 98, punishment under 99, and EGM by company 100. Prerequisites: properly convened, constituted, conducted, concluded. So prerequisites you can see for properly convened: notice under section 101, explanatory statement under section 102 is required, quorum section 103. Who will check quorum? Chairman will check the quorum, 104. While checking quorum, proxy shall be excluded, 105. President to governor, one character is equal to 2, 112. President, governor, representative shall be included. Body corporate representative shall be included, 113. And properly conducted, so yes, I think adjustment to be done. Yeah, properly conducted is about, types of voting. A small correction is required, I'll do it, nothing to worry. Conducted, for properly conducted we need to check restrictions on voting rights and types of voting. Show of hands, e-vote, poll, postal ballot. The result of this properly conducted, the result of this voting, you can see resolutions. The result is resolution. Circulation types, special notice, adjourn meeting, ROC filing. Circulation 111, types 114, special notice 115, adjourn meeting 116, ROC filing 117. Now for properly concluded, if you see any confusion, don't worry. This handwritten notes notes is already available in website. So here you can see, for properly conducted we will see voting. So restrictions 106, types, show of hands. For types it's SEPB, remember like this, SEPB. Show of hands 107, e-vote 108, poll 109, ballot 110. The result is resolution, circulation of resolution 111, types 114, special notice 115, adjourn meeting 116, ROC filing 117. So once properly conducted, then it should be properly concluded. Minutes should be maintained under section 118. Inspection of minutes is there under section 119. Electronic mode 120. Once over, filing a report of AGM 121, benefits of OPC 122. So here I'll do rectification, don't worry. If at all needed, I'll split this sections chart into 2 pages. Don't worry. Next one, section 88. Section 88, register of members. Applicability. Every company should maintain register of members since incorporation. If it is a company with share capital, company without share capital. Company without share capital, you can see the particulars. Members name, address. In case of body corporate as a member, SIN. Next one, PAN of the member, nationality, membership start date, end date, guarantee amount, and any other instructions by the member. Next one, company with the share capital, register of members MGT1, register of debenture holders MGT2, other security holders also MGT2. For other security holders MGT2. These are the format numbers. Okay, for equity shareholders MGT1, for preference shareholders MGT1, debenture holders MGT2, other security holders MGT2. Next one, index. Registers include index. Of course, register is not required if number of members are less than 50. If number of members are less than 50, index is not required. And the records maintained by depository, register of beneficial owners is equal to company's register of members. So any record maintained by depository, that is record of beneficial owners, register of beneficial owners, is equivalent to company register of members. Next one, general requirements. Within 7 days of board approval for allotments, transfer of securities, transmission of securities, the register shall be updated. And changes in due to mergers, buyback, forfeitures shall also be recorded. Same time limit, 7 days. Next one, location. You should keep these registers at registered office. With the special resolution, you can maintain them any place in the city, town where registered office is situated, in which registered office is situated. Any other place in India in which more than 1/10 total members reside. For example, register of members, total members are 1180. Company registered office is at Chennai. Suppose company members are from locations, following locations: Mumbai 80, Chennai 500. Next one, Bangalore 200. Next 780 over, next 400, Hyderabad 100. Next some Kerala, Trichy, for example, Trichy 100, another 200 required, right? Delhi 100, Pune 100. So total 1180, total number of members are there. Now first priority you should give to Chennai. Undoubtedly, first priority Chennai register office, where register office is situated. No sir, I want to maintain registers at any place, sir, in India. Then you have to check where 1/10 of the members reside. So 1180 into 10%, if you see, 1/10 means 118 members. 118 members, if you see, only Bangalore had more than 118 members, more than 1/10. So Bangalore had more than 118. So if at all needed, you can maintain registers at Bangalore also. But for maintenance of registers in Bangalore, one more requirement is required. One more requirement is to be satisfied, that is a special resolution. Special resolution. Next one. A reference of the judiciary regulatory orders affecting shares shall be updated in the register, shall be recorded. This is very important, This is very, very important to be tested in the upcoming, it will be tested in the upcoming exams. Just observe. For listed companies, any charge created by its promoters on their holdings, any charge by the promoters on their holdings in listed companies shall be recorded in the register within 15 days of such event. Remember, I'm a promoter of a listed company. I'm holding some 25% capital in that company. So on this 25%, if I create any charge, then I need to update the same to the company. Within 15 days of such event, company should record the same in the registers. Changes in member status must be updated. Rectification pursuant to legal orders shall also be indicated in the register. So out of this, this is very, very important point. Promoters holdings, any charge created on promoters holding, and this is applicable only for listed companies, not for all companies, only for listed companies. So what is the updation time period? 15 days of such event, the same shall be recorded in the register. Next one, foreign register. If a company is having members, debenture holders, or outside India, then company can open a foreign register that is outside India. What are the conditions? Check AOA authorization, whether AOA provides whether AOA allows it or not. Then filings with ROC, form number MGT3, 30 days. Within 30 days of opening foreign register, communicate the same with ROC. Also maintain a duplicate register, which is exact replica of foreign register at register office. Entries that were entered in foreign register must be transmitted to registered office within 15 days. Today, entry was recorded in foreign register. The same shall be notified. The same shall be notified within 15 days. Company will update the same in duplicate register. Who will take care of entries? Authentication of entries. Company secretary, board authorized person. Next one. In case of default, company 3 lakhs fine, officer in default 50,000 fine. Next, section 89, declaration of beneficial interest. So here, a registered holder shall file MGT4 with company within 30 days of getting shares in his name without beneficial interest. Beneficial owner should file MGT5 within 30 days of getting beneficial interest. Changes shall also be updated with the company. Once company receives that information, company will communicate the same with ROC in MGT6. The time limit is 30 days. In case of non-compliance, registered holder, beneficial owner, the punishment is 50,000 plus 200 per day up to 5 lakhs. No declaration, then no benefits. And for company default, by the company 1,000 per day up to 5 lakhs, officer in default 1,000 per day up to 2 lakhs. And this section 89 is not applicable to trust, mutual funds, venture capital funds, SEBI approved funds and government companies which has fulfilled requirements of section 82 and section 137. Next, section 90, significant beneficial owners. So difference between 89 and 90, the difference between 89 and 90, 89 it talks about beneficial owner, 90 it talks about significant beneficial owner. So the difference is 10% ma. 10%. If a person is having 10% interest in the company, 10% interest, here the equation is like that: personal interest plus beneficial interest. Personal interest plus beneficial interest, if it is 10% or more, then that fellow is known as significant beneficial owner. Less than 10% means just a beneficial owner. So any individual alone plus others holding 10% interest, 10% of the voting rights, 10% of the dividends, then that fellow is treated as significant beneficial owner. SBO has to file BEN1 with company. Existing, that means by the time of commencement of these rules, at the time of commencement of the rules, you are already a significant beneficial owner. Then within 90 days of commencement of rules, comply with these rules. For new significant beneficial owners, that new time limit will be 30 days only. Sir, I am already SBO at the time of commencement of these rules, sir. Then within 90 days I need to comply these rules. No, sir, I became SBO after commencement of these rules. Then I will have 30 days for communication purpose. Company will communicate with ROC in BEN2 within 30 days of receiving declaration. And BEN3 form is for maintenance of the register. So these registers are available for inspection during business hours, at least 2 hours per day, and fees up to 50 rupees. So here you can see exact format. Just hold a second. Yeah. Step numbers you can see. First, if company is having a doubt, company doubted one person, that person may be a significant beneficial owner, then issue notice in BEN4. That person should file a declaration saying that no, I'm not SBO. Like that, within 30 days he need to file information with company. if any person fails or provides unsatisfactory information, then company will file an application with NCLT within 15 days. Within 15 days of expiry of 30 days or within 15 days of unsatisfactory information. Yeah, same thing is there. Then NCLT will pass an order. NCLT will pass an order imposing restrictions on the transfer and suspension of voting and dividends. NCLT will pass an order, and this NCLT order can be relaxed. That means the person can file an application with NCLT. Sir, please remove restrictions. I'll comply with the rules and regulations. I'm sorry, I'll comply with rules and regulations. So this one time, remove the restrictions. Like that, he need to file application within 1 year of imposing the restrictions. If at all there is no application, if there is no application from that person, then NCLT will pass an order to transfer all the shares to IEPF authority. IEPF authority. So here, if you observe carefully, so starting step, once again, just observe carefully, a small change. The change is arrow mark this side. Arrow mark this side. Arrow mark is this side. Now you see, first company will give notice to the person. We had a doubt that you might be significant beneficial owner. So that fellow will have 30 days time limit for filing a declaration. If declaration is not filed or if he provides unsatisfactory information, then company shall communicate with NCLT within 15 days. NCLT within 60 days pass an order imposing restrictions on transfer, imposing or suspending the rights available to the person. Now this NCLT order can be removed. This NCLT order can be relaxed if that person comes and files an application with NCLT within 1 year of imposing restrictions. Within 1 year of imposing restrictions, if we come and file an application for removing restrictions, then NCLT will give permission. Or else NCLT will order company to transfer all the shares to IEPF. That is all about section 90, significant beneficial owners. Of course, this particular section 90 is not applicable to government entities, local authorities, government controlled bodies, mutual funds, REIT. Next one, other SEBI regulated entities, investment vehicles regulated by RBI, IRDA. Next one, PFRDA. Next, IEPF authority. For these entities, section 90 is not applicable. SBO default 50,000 rupees fine plus 100,000 per day up to 2 lakhs. Company 1 lakh plus 500 per day up to 5 lakhs. Officer in default 25,000 plus 200 per day up to 1 lakh. In case of fraud, section 447 is applicable. Entire section is not applicable to government company if it is regular in filing annual returns under section 92 and financial statements under section 137. Next, power to close registers. Company, after giving a notice of at least 7 days before closure, it can close register of members, debenture holders, other security holders. The closure period is at a time maximum 30 days. During the year, maximum 45 days. One time you can close it for 30 days. But total period involved in the closures throughout the year should not cross 45 days. Manner of closure, listed companies or companies in the process of listing should give advertisement in 2 newspapers, publish it on government notified website as well as company website. Now this advertisement is not applicable to private company. Public notice is not applicable to private companies. So listed company in the process of listing, SEBI will prescribe minimum notice period 7 days or less than 7 days, that's it. And for each day of default, 5,000 per day is the punishment, maximum 1 lakh. Of course, this offense is compoundable. No need to wait for punishment. You can admit your mistake and you can pay that fine immediately. So 91. In entire 91, you have to remember 3 time limits. Notice period at least 7 days before closure, and closure period at a time 30 days, throughout the year 45 days. Remember, that's it. Listed company, 2 advertisements. One is in English newspaper, other one is in vernacular newspaper. Also publish it on websites. But this advertisement is not applicable to private companies. Next, section 92. What is section 92? Annual returns. Applicable form, if you see, MGT 7A. MGT 7A for OPC and small company, MGT 7 for all other companies. Signing, who can sign this annual return, sir? Director of the company. In case company is having CS. If no CS, then practicing CS. Go outside, get an independent company secretary, ask him to certify annual return. But for OPC, small companies, a single director signing itself is enough. OPC, small company, one director signing annual return is enough. No need of practicing CS. Time limits, 60 days of AGM. Within 60 days of AGM, form MGT 7 or MGT 7A shall be filed. Next one. If AGM was not conducted, then within 60 days of due date of AGM, this form should be filed. The annual return shall be disclosed in board report. So the web link where annual return was uploaded or published, that link shall be disclosed in the board report. Now coming to the contents of annual return, registered office, business activities, holding company details, subsidiary company details, associate company details, shareholding pattern, number of members, simply details of the members, details of the members, debenture holders, foreign institutional investors holding the shares, FII, promoters, directors of the company, KMP of the company, meetings, about general meetings, about board meetings, so those details. Next one, attendance of the directors, attendance of the meetings, simply quorum present or not, remuneration to the directors, any penalties or punishments on the company during the reporting period, and any other certifications. So these are the contents of annual return. In addition to this MGT 7, MGT 8 is applicable to two companies, listed companies and companies with paid up share capital 10 crores or more, with a turnover 50 crores or more. Just a second. Yeah. Or you can see or. 1 second. Okay, fine. So MGT 7 or 7A is applicable to all the companies, but MGT 8 is applicable only to 3 companies. First one, listed companies. Second one, unlisted companies with paid up share capital 10 crores or more or turnover 50 crores or more. Suppose there is a company called TS Limited, which is an unlisted company, but its turnover in the preceding financial year is 150 crores. Now is MGT 8 applicable? 100% applicable. Is MGT 8 applicable? 100% applicable. That's it. Suppose, sir, there is a company TCS Limited, which is a listed company. Its turnover is just 10 crores, sir. Its paid up share capital is just 1 crore. For example, I am telling. Now both the criteria, any one criteria not satisfied. Any criteria not satisfied. Now MGT 8 applicable or not applicable? Applicable, since it is a listed company. Penalties, delay filing for company 10,000 plus 100 per day up to 2 lakhs. Officer in default 10,000 per day plus 10,000 rupees plus 100 per day up to 50,000. CS, for any false certification, the punishment is 2 lakhs. Next, section 94. Place of keeping and inspection of registers, returns, etc. Place at registered office of the company or any place in India subject to a special resolution and more than 1/10 of the members reside. Next, preservation. Register of members permanently, whereas register of debenture holders when you redeem them. After that, maintain for 8 years. 8 years. Foreign registers, same like above, foreign register of members permanent. Foreign register of debenture holders up minimum 8 years post redemption. Annual returns minimum 8 years from the date of filing. Next one, these registers and returns are available for inspection during business days, during business hours, and at least 2 hours per day. At least 2 hours per day inspection time period, inspection should be allowed. Fees coming to the members, debenture holders, no fees. Coming to the outsiders, entry fees up to 50. And if someone want to make a note of it, someone make a note of it, I want this particular ledger, so if you permit me, I'll write it separately like that. Free for members, free for everyone. Whereas if you want copies, 10 rupee per page printing cost maximum company can charge, and within 7 days of request plus deposit of money, it is the duty of company to submit copies of annual returns, copies of registers. Of course, personal details of the members like PAN, email, and unique document identification numbers, okay, no, unique numbers. So personal details were not given. Phone number, mail ID also will not be given. Next one, here itself, one more point is there. The point is soft copies. For soft copies, no fees. For soft copies, up to 3 preceding financial years. Up to 3 preceding financial years, without fees allowed. Without fees allowed. For soft copies, there is no charge at all. So just 1 second, ma. Yeah. So this ignore. This point is there, but not in this section. I'll discuss with you this point in the upcoming sections. So for the time being, like this, copies, if you want hard copies, 10 per page, up to 7 days of return request. Sorry, within 7 days of return request and deposit of money, it is the duty of a company to dispatch these documents. Next one, registers maintained under this chapter, under the Companies Act, indices, annual returns, shall act as an evidence under Companies Act. Shall act as an evidence under Companies Act. So that's all about registers and returns. Updated copy, just only one correction is there. Updated copy will be once again re-uploaded into Google Drive. The same copy you can take it. So only one correction is there. Okay, fine. Next one, ma. Part B of this chapter, meetings. Section 101. Notice of meeting. Notice of meeting. Notice period. Minimum 21 clear days. The time gap between dispatch of notice and meeting date should be 21 clear days. Clear means date of meeting and date of dispatch of notice shall be excluded. For Section 8 companies, it's 14 clear days. Of course, Section 8 companies should not commit default under Section 92, under Section 137. IFSC public companies, subject to AOA. Next, so for them also same time limit. 21 clear days excludes date of serving notice, day of meeting. If you are dispatching notice via post, not electronic mode, via postal mode, then deemed served after 48 hours of posting. Deemed service of notice after 48 hours of posting. That means if you consider post, then 21 clear days plus date of dispatch plus date of meeting plus 48 hours, which means 2 days. So total it will be 25 days. Total it will be 25 days if it is a postal mode. Next one, to whom? So notice shall be given to the members, legal representatives of the deceased members, insolvent case official assignee, and all auditors of the company, all directors of the company, CA, CMA, that means company auditor, secretarial auditor, cost auditor. Okay, so to each and every of them notice shall be given. If members are alive, members. If any member is deceased, then to his legal representatives. If a member become insolvent, to his official assignee. What would be the contents of the notice? Simply time, day, date, place and agenda of the meeting. This will be the contents of the meeting. Who is having authority to give notice, or who is having authority to fix the contents of the notice? Board of directors. By passing board resolution, they will fix time, day, date, place and agenda of the meeting. Notice issued without board resolution is invalid. Of course, it can be ratified before commencement of meeting. Now we need to check omission of the notice. Now you need to check, omission of notice. You need to check whether it is intentional omission or accidental omission. Sir, intentional omission, sir, entire meeting is invalid. Sir, it is accidental omission, sir, then there will be no impact on general meeting proceedings. Whether it is intentional or accidental, management has to prove. Burden of proof lies on management. Next one, electronic mode, that is over email. Now members should be given at least one time opportunity every year to update their mail address, and this opportunity will be given to those persons who not yet registered their mail ID. Next one, shorter notice, that means less than 21 clear days in case of all companies, less than 14 clear days in case of section 8 companies. So for that shorter notice to be valid, you have to take consent from the following persons. If it is a shorter notice for AGM, shorter notice is for AGM, at least 95% of the members entitled to vote must give written consent, or else notice is invalid. If notice is invalid, meeting is also invalid. AGM, is it a company with share capital, company without share capital? Sir, company with share capital, sir. Majority of members entitled to vote, and they should have at least 95% of the paid up share capital. If these two conditions, condition 1, condition 2 satisfied, then shorter notice is valid. Whereas company without share capital, here majority members, 95% members criteria not required. Here just members holding 95% of the voting power entitled to vote, enough. 95% of the voting power. So here the slowly from number it is focusing on the control plus number. Finally it's about control. For AGM all are equal, so number. For EGM, company with share capital, majority members and they should possess 95% of the paid up share capital. Whereas company without share capital, majority of the members are not applicable, 95% of the members are not applicable. What is applicable? 95% of the voting power entitled to vote, enough. So that's all about section 101. Next is section 102, explanatory statement. Here the decisions at general meeting are classified into two categories: ordinary business or special business. Ordinary business, 4 items ma: adoption of financial statements, consolidated financial statements, board report, audit report, appointment of auditor, appointment of director in the place of retiring one, and declaration of dividend. These 4 matters are ordinary business items. Explanatory statement not required. Coming to special business, explanatory statement is required in order to understand meaning, scope, implications of the transaction. And in this explanatory statement, the following content shall be disclosed. First one, nature of concern, nature of interest of directors and managers, KMP, in the particular proposal, and relatives of the above. Additional information enabling informed decision making shall also be disclosed. Any other information which can influence decision making of the users. Decision making of the users means simply members, shall also be disclosed. Additional disclosures ma: suppose company 1 is entering into a contract with company 2. For example, for this contract members approval are required. Now first company, KMP, directors, promoters, if they have 2% or more interest in the second company, 2% of shareholding or more than 2% of shareholding, then the extent of interest they are having in that second company in the proposal shall be disclosed. If it is less than 2%, disclosure is not required. Less than 2%, disclosure not required. And you need to provide time and place of inspection of referenced documents. Effect of non-disclosure: any benefit obtained by KMP, promoter, director or their relatives, they cannot enjoy with the benefit they will hold that benefit as a trust. as a trustee, and they will have to return that benefits along with that penalty. The penalty is 50,000 or 5 times of the benefit received, whichever is higher. Whichever is higher. That is all about section 102. In one attempt, MCQ came on this 2% shareholding. Next, 102 over. Next one, 103 quorum. Health. Yes, my health is good only, but not the best. So little bit cold is there. So that's why small disturbances. Kindly excuse. Next, section 103 quorum for meetings. What is meant by quorum? Minimum number of members required for a valid meeting. Sir, how much, sir? Minimum number of members means how much? If it is a private company, at least 2 members should be personally present, or AOA, it's not MOM, I'm sorry, AOA, the limit mentioned in AOA, whichever is higher. And second one, public company, slab limits up to 1000 5 MPP, 1001 to 5000 15 MPP, 5000 above 5000 30 members personally present, or articles of association, whichever is higher. MPP, members personally present, excludes proxy. Okay na? If no quorum within 30 minutes of scheduled time, then look at the meeting. What type of meeting is it? EGM called by requisitionist or others. If EGM called by requisitionist, meeting stands cancelled. Other meetings, the meeting stands adjourned to the same day, same time, same place next week, or scheduled day, scheduled time, scheduled place. Next, for adjourn meeting, notice is required, but not 21 days notice, just 3 days notice is enough. Individual notice not possible, sir. Then go with advertisement. If quorum not met in adjourn meeting also, then how many members personally present to the meeting? Those members personally present shall constitute quorum. Suppose you have to check original meeting, sir. Original meeting, my company had total 1000 members, sir. Oh, if your company is having 1000 members, for you 5 is applicable. So for original meeting only 4 came, sir. Oh God. And for adjourn meeting only 3 came, sir. Now these 3 who attended adjourn meeting shall constitute quorum. Here no need to check 5, because original meeting was adjourned due to lack of quorum. If one meeting is adjourned due to lack of quorum, at the adjourn meeting the members personally present shall constitute quorum. Okay na? Next one, secretarial standards. We need to check secretarial standard 2 for quorum also. If one person is representing multiple corporates, suppose Mr. A representing Reliance Industry, representing TCS, representing Tata Steel, he attended general meeting of C Limited. In C Limited, Reliance Industry is a member, TCS is a member, next one, Tata Steel is also a member. Now, if a single person representing these 3 companies attends the meeting, then this person will be counted as 3, not 1. Counted as 3. Count as multiple. Note, at least 2 individuals must be present. So that one individual representing count 3, another individual. So total the count will be 4 like that. Continuity, quorum must be present throughout the meeting. Sir, suppose in a meeting there are 6 proposals. For 4 proposals, quorum is there, sir. For balance 2 proposals, there is no quorum. Then what about the status of those 2 proposals? Can I continue the meeting? No, meeting stands adjourned. At the adjourned meeting, you can take up those 2 proposals and you can discuss and you can pass resolutions. Members who have already exercised voting remotely, if he attends the meeting, he will be counted. Related parties, if a person is having interest in the proposal, related party transaction, for example, so he will also be counted for the purpose of quorum. Of course, not entitled to vote. He is not entitled to vote, but for the purpose of quorum, counted. Next, postal ballot resolutions, quorum is not applicable. For a resolution, if postal ballot is applicable, then no need to check quorum. Quorum is not applicable. That's all about section 103 quorum. Next, 104 chairman of the meeting. 104 chairman of the meeting. Yeah. Generally, members personally present shall elect chairman by show of hands. If AOA is silent, members personally present shall elect one among themselves to take the position of chairman by show of hands. If any demand for poll was made, chairman under show of hands remains as an in charge until a new person is elected under poll. And what are the powers of the chairman? He managed meeting, he maintained decorum, and he is responsible for proper proceedings at the meeting. He will finalize the minutes. He has authority to make quick decisions, and he should remain independent, impartial. Casting vote, special power to the chairman in case of equality of votes. Votes in favor equal to votes against. Votes in favor equal to votes against. In case of equality of votes, if AOA is silent, OR is said to be dropped. If AOA permits, chairman will be given second vote, so he will decide whether resolution is passed or resolution is dropped. So this section is not applicable to private companies if AOA provides otherwise, and if company not yet defaulted under section 92 and section 137. So that's all about section 104 chairman. In chairman, important point is casting vote. This casting vote comes only in one case where equality of votes, and AOA should provide for casting vote or else no casting vote. Next, proxy. Proxy is having right to attend the meeting, but proxy has no right to speak at meeting. Proxy is not counted for quorum, only members personally present shall be considered for quorum. And proxy can demand poll. He can demand poll, no problem. And he can cast vote. He can cast vote under poll. Under show of hands, he is not entitled to vote. Proxy benefit is applicable to all companies except these two companies. One is company without share capital if AOA is silent, and prescribed companies. To these two companies, proxy benefit is not there. Sir, who can appoint proxy? Any member entitled to attend at the meeting and vote at the meeting. Any member entitled to attend at the meeting and vote at the meeting can appoint a proxy. Sir, who can be appointed as a proxy? Any person for all companies, whereas for section 8 companies, only member can be appointed as proxy. And proxy can represent maximum 50 members or number of members, X number of members, but this total number of members must not hold cumulatively 10% of the share capital. That means he can represent either 50 members or he can represent 10% of the share capital of the company, whichever is less. Any member holding more than 10% of the share capital can have one proxy, but he should not act as a proxy for other members. Next one, the benefit of proxy should be disclosed in the notice or else penalty 5,000 rupees. Format for proxy is MGT 11. Time for deposit of proxy is 48 hours before meeting. Company should receive proxy form at least 48 hours before meeting scheduled time. And proxy forms can be available for inspection, but for that surprise inspection not allowed. You have to give 3 days before meeting a notice to the company. You have to give a notice to the company at least 3 days before meeting. Okay na? And inspection start time is 24 hours before meeting. Conclusion ends with conclusion of the meeting. For example, meeting start date is, meeting start time, meeting date 24th June 2028. 28 no 26 enough, 26 10 a.m. meeting start time. Now inspection you can start from 23rd June 26 morning 10 a.m. 24 hours before commencement of meeting inspection is allowed, that too only during business hours, not night hours. Suppose meeting end time is 12 p.m. for example, 12 p.m. so up to 12 p.m. you can inspect proxy forms. For that you have to give notice of inspection 3 days before meeting. Inspection will not be commenced immediately after giving notice because there is a time for receiving proxy forms. Company will receive proxy forms till 48 hours before meeting. So that's why before 48 hours you can't carry inspection. Before 3 days you must give notice, and before 24 hours of commencement of meeting you can start inspection. Inspection will be continued till the conclusion of meeting. And company is prohibited from issuing invitations to appoint specific proxy without members' request. In case of contravention, 50,000 penalty. So company should not tell to the member, like if you want to appoint proxy, only the persons whose names are mentioned in the list, you have to select only these persons only. You have to select only these persons. No, Like that, officer gets 50,000 penalty. Suppose member made a request, I need a list of persons who are willing to act as a proxy, and company is giving notice. Company is giving that list of persons who are willing to act as a proxy. In that case, there will be no punishment because there is a member's request. Next one, ma. Restrictions on voting rights, section 106. Restrictions on voting rights. AOA restricts voting rights only in two cases. Case 1, member had some unpaid dues. Company exercised lien on member shares. Other than this, in nowhere company cannot exercise any restrictions on voting rights of the members. And the people falling in this category, even they can't even sign requisition under section 100. Under section 100, they can't even sign requisition. Other grounds, any restriction is prohibited. Next one, restriction in the absence of articles of association. Voting rights cannot be restricted. If AOA is silent, simply if AOA is silent on restrictions of voting rights, then in all cases members get voting rights. Whether he is holding shares with calls in arrears, whether he had some dues to the company, immaterial. If AOA is silent, all the members are entitled to vote. In case of joint shareholding, the first shareholder, senior, the first shareholder, the person whose name was mentioned in the first of the list, that fellow is entitled to exercise voting rights. In case of reallotment of forfeited shares, new allottee cannot vote until all dues are paid. So once he pay all the dues, he is entitled to exercise voting power. Next one, types of voting. We are having 4 types of voting. One second. We are having 4 types of voting. Show of hands, e-voting, poll, postal ballot. Show of hands. Generally, voting should be conducted by show of hands. But if there is any demand for poll or if e-voting is applicable, then show of hands not allowed. The declaration of result. Who will take care of declaration of result? Chairman. And entry in the minutes will act as an evidence whether resolution under show of hands is passed or not. Next, show of hands over. Next, e-voting. E-voting is applicable only to 2 companies, listed companies and companies with 1,000 or more members. If company is having 1,000 or more members, e-voting is applicable. For all listed companies, e-voting is applicable. But these 2 companies, Nidhi company and certain institutional investors, for them e-voting is not applicable. Next, poll. Poll is applicable only when there is a demand for poll. Sir, what is the criteria for demanding poll? If your company is a company with capital, share capital, at least 1/10 of the voting power or paid up share capital of 5 lakhs, any one condition satisfied, those people, whether members or proxy, proxy is also having right to demand poll. Okay, members or proxy or both having 1/10 of the voting power or 5 lakhs paid up share capital, if they demand poll, poll is compulsory. Company without share capital, 1/10 of the voting power. Next one, postal ballot, voting by ballot paper through post. This is mandatory only for 10 items, and postal ballot is not applicable in case company is having less than or equal to 200 members. So if a company is having up to 200 members, postal ballot is not applicable. So coming to the e-voting, there will be a cutoff date. Eligible members, the eligible members are the people whose names are recorded or whose names were there in the register as on cutoff date. That cutoff date should not be older than 7 days. Remote e-voting, voting electronically from a location other than meeting venue. Procedure, first notice, dispatch of notice. Notice shall be sent by registered post or speed post or courier or email, published on company and agency website. Coming to the contents, this time voting shall be conducted through e-voting means. Instructions for generating login credentials and the time schedule. The time schedule should be at least 3 days and it should be closed at 5 p.m. a day before meeting. Also, the notice shall be advertised in 2 newspapers at least 21 days before the meeting, so that new members will get the information. First, board of directors will appoint a scrutinizer, independent professional. Scrutinizer is an independent professional. Votes are counted and consolidated by the scrutinizer. Register of votes is maintained securely until meeting minutes is finalized. After that, all these records will be given to the chairman of the company or chairman of the meeting. The date of resolution is nothing but date of the meeting. Resolutions proposed for e-voting, once proposal is made, it cannot be withdrawn. Next one, conditions for poll. In this remember, generally scrutinizer is appointed by board of directors, but poll scrutinizer shall be appointed by chairman. Chairman appoints the scrutinizer. And in this, time limit for conduct of poll is very, very important. What is the time limit for conduct of poll? For the matters of adjournment of meeting, or election of chairman of the meeting, for these two matters, poll shall be conducted immediately, and for other matters, poll can be conducted within 48 hours of demand for poll is made. Section 101 to 107 and 109 is applicable to private companies unless AOA provides otherwise. If AOA provides otherwise, that means these sections are not applicable to me, then these sections are not applicable to that company. Next one, in postal ballot, very important point is to which resolutions postal ballot is mandatory. For these 10 proposals, postal ballot is mandatory. Change of objects, alteration of AOA, public to private company, private to public company, shifting of registered office, alteration of objects in the prospectus, equity shares differential rights, variation in rights, buyback of shares, appointment of small shareholder director, sale of undertakings, loans, guarantees. So for these 10 matters, postal ballot is mandatory. Of course, you can also conduct remote e-voting in the place of postal ballot. In the place of postal ballot, you can conduct remote e-voting. That privilege is there. And for all other business items, postal ballot is optional, but postal ballot is not applicable to the 6 proposals. To the 6 proposals, postal ballot is not applicable, simply prohibited. Which 6 proposals? We had ordinary business items 4, adoption of financial statements, declaration of dividends, appointment of directors in the place of those retiring one, appointment of the auditor, and fixation of remuneration. These 4 plus matters requiring director attendance, matters requiring auditor attendance. So 4 plus 2. So to the 6 proposals, postal ballot is prohibited. And time period for postal ballot is, under postal ballot, you will have 30 days for exercising voting power. Scrutinizer, board of director appoints scrutinizer here. Next, postal ballot notice shall be advertised in 2 newspapers. Notice includes draft resolution copy, reasons. Next one, that means justification, instructions for voting. Next one, once voting period is over, within 7 days of voting period completion, scrutinizer shall prepare a report and submit it to the company. Company will publish the results. Company shall publish the results. So that is all about section 110, postal ballot. Next one, 111, circulation of members resolution. Circulation of members resolution. Prerequisites. What is the circulation of members resolution? Suppose in a notice calling for meeting, only 6 proposals were there. Member want to pass a resolution for 7th proposal, or member want to discuss a particular matter which is not there in 6 proposals. For just discussion, 2 weeks before meeting, he is required to send a notice to the company. No sir, I need a resolution sir. It's not only a discussion, I need a resolution. Then at least 6 weeks before meeting, they should send a notice requiring resolution to the company. First of all, to send this, the eligibility criteria is, if you are a company with share capital, at least 1/10 of the paid up share capital you need to possess, entitled to vote at the meeting. If you are a company without share capital, 1/10 of the voting power. So these people should sign that members resolution copy, then only 111 comes into the picture. And cost of circulation must be deposited by the people who sign this notice. Exemption from circulation, if CG is satisfied that resolution is of defamatory or abusive, then CG will order company not to circulate it. In that case, circulation not applicable. And default by the company, company 25,000, officer in default 25,000 is the punishment. Okay na? Next one, representations. 112, president and governor can appoint representative for company meetings. That representative is deemed to be member. That means, will he be counted for the purpose of quorum? Yes, counted for the purpose of quorum. He can also appoint proxy for the meetings. Body corporate representative is also deemed to be the member. He will be counted for the purpose of quorum. Okay. That's it. Next 114. It's all about resolution ma. Motion means proposal by the company. Resolution means adoption of the motion. We are having two types of resolutions. One is ordinary and the other one is special. Ordinary, votes in favor greater than votes against. Ordinary, simple majority, section 101 complaints. Whereas special resolution, votes in favor greater than or equal to 3 times of votes against. Disclosure of intention of special resolution and section 101 complaints. Only when these 3 conditions are satisfied, special resolution is valid. In examination, they will miss out this point, disclosure of special resolution intention. If special resolution intention was not disclosed, then at meeting even you get unanimous resolution, it is not a valid resolution. Next, resolution requiring special notice. Resolution, special notice is required for these 5 proposals that is subject to AOA. One is appointment of auditor other than retiring auditor. A resolution not to appoint retiring auditor. Removal of auditor before the end of the term. Appointment of the new director in the place of a removed director. Or AOA may specify additional matters. So here 2 matters is for auditor, 2 matters is for director. 2 matters is for auditor, 2 matters is for director. Removal of director or appointment of any person in the place of retiring director. Appointment of auditor in the place of retiring auditor. Or existing auditor not to be reappointed. For these 4 proposals and any other proposal specified by AOA, special notice, section 115 special notice provisions will apply. For making this special notice, first of all, notice is something company will send to the members, whereas special notice is something members will send to the company. Notice is generally sent by company to the members, whereas special notice is something members will send to the company and company will circulate special notice among the members. So members holding at least 1% of the paid up voting power or paid up share capital at least 5 lakhs. Any one criteria satisfied. So at least 14 days before meeting, but it should not be older than 3 months before meeting. 14 days to 3 months. Then it is the duty of company to circulate among the other members at least 7 days before meeting. Notify all the members. Sir, 7 days before individual notice not possible, sir. Then advertise it. At least 7 days before meeting, at least 7 clear days. Here 14 days means 14 clear days, 7 days means 7 clear days. Advertise it in the newspapers. So that's all about section 115. Next, section 116. Very simple section. If a resolution was passed at adjourned meeting, then the resolution effective date will be not original meeting date. The resolution effective date will be adjourned meeting date. So actual date of adjourned meeting is the effective date of resolution. Next one. Section 117, resolutions and agreements to be filed. Resolutions and agreements. Sir, what resolutions or what agreements to be filed with ROC? So, all the special resolutions, unanimous resolutions, appointment or reappointment or variation in terms of managing director, agreement with managing director, resolution by the class shareholders, resolution for voluntary winding up, board resolution subject to section 179 subsection 3 and prescribed resolutions shall be filed with ROC. In which form? MGT 14. What is the time limit? Within 30 days of resolution or agreement. And what are the attachments? You need to attach explanatory statement. And you need to attach copies of the resolutions, copies of the agreements. Of course, these rules are not applicable to banking companies, NBFC companies, housing finance companies. In case of default, the punishment will be company 10,000 plus 100 per day up to 2 lakhs. Officer in default, 10,000 plus 100 per day up to 50,000 rupees. This is the penalty for delay filing. Next one, section 118, minutes. So then 119, 120, then we will have AGM, that's it. So general meetings, management and administration will be over. Just 5 to 10 minutes, 5 to 10 minutes. Minutes is applicable for all the meetings of the members, creditors, directors, committee of directors. Even for postal ballot resolutions also minutes is applicable. What is the time limit for completion of minutes? 30 days of the meeting or 30 days of postal ballot resolution. And only these 3 matters can be excluded from the minutes subject to chairman decision. Which 3 matters? Defamatory, irrelevant matters, detrimental matters. And contents of the minutes. The minutes should contain fair and correct summary proceedings, including appointments done at the meeting, appointment of auditor, appointment of director. Those details shall be incorporated in minutes. Minutes of board or committee of directors shall consist of the directors' names who present, directors' names who are against to the resolution or who are not giving approval to the resolution. So votes in favor by directors, names not to be recorded. Votes against or not casting the vote at any meeting for any proposal, only those two directors' names shall be recorded in the minutes. Non-compliance of section 118, the penalty for company 25,000, officer in default 5,000, and for tampering 2 years imprisonment and fine 25,000 to 1 lakh. Next one, signing of minutes. So who can sign minutes? So minutes of general meeting, minutes of postal ballot shall be signed by chairman of the meeting, chairman of the company. If chairman is not available, then director authorized by the board of directors. What is the time limit for signing minutes? 30 days. Within 30 days of completion of meeting or within 30 days of passing resolution under postal ballot, minutes should be kept ready, minutes should be signed. Whereas board meeting minutes, committee meeting minutes, so here there is no time limit on signing. However, chairman of the said meeting or subsequent meeting can sign it. Chairman of the specified meeting, that means the meeting which was completed recently, or subsequent meeting chairman can sign board minutes or committee minutes. Is there any time limit? There is no time limit. Preservation of minutes, general meeting minutes only at registered office, no other location. And time period is permanent till the liquidation of company. Whose custody? Either company secretary or authorized director. Whereas board meeting minutes, registered office or any place decided by board. Any place decided by board. Time period permanent till the liquidation. Custody CS or authorized director. So this is all about minutes, ma. Circulation of minutes, yes. Here you can see, yeah, soft copy. Previously I told you that soft copy of registers, right? The soft copy is not of registers, soft copy is of minutes. That's what I told you earlier. Now the point came. If anyone want to inspect the minute books of general meeting, yes, they should come to registered office. Inspection time minimum 2 hours per day during business hours. Can be inspected by any member. If you want to take extracts, free copies. If you want to take any copy, rupees 10 per page you need to deposit, and within 7 days of written request and deposit of fees, it is the duty of company to dispatch the requested documents, or else company penalty 25,000, officer in default penalty 5,000. If company is not providing inspection facility or copies facility, then NCLT, you can go and file an application with NCLT. NCLT may order for inspection and NCLT may order for dispatch of requested copies. If you want soft copies, completely free of cost, but those minutes are limited to preceding financial years 3 preceding financial years only. Next one, ma. Next one, section 120. Even circulation of minutes without members' request is punishable offense. So that one point remember, circulation of minutes without members' request is not allowed. Section 120, maintenance and inspection of documents in electronic form. This is applicable to only listed companies and companies with more than or equal to, greater than or equal to 1,000 holders. On all these limits, I'll come up with a separate video, don't worry. In exceptional topics, I'll mainly specify these limits, because I don't know whether you are observing the trend or not. Minimum 25 to 30 marks are coming from the limits. So on all these limits, I'll come up with a separate video, don't worry. Physical records to be converted into electronic form, and the time period given was 6 months. Requirements: prescribed format, readable, printable, retrievable, signable digitally, it should not be editable. Updating includes record dates. And the responsibility: managing director, CS, authorized officer will take care of the records in electronic form. Next, section 96, AGM. It is applicable to every company except one person company. Coming to the frequency, every year one AGM, but for OPC not applicable, because in OPC only one member is there. Time limits. First AGM time limit within 9 months from the closure of first financial year. When the financial year is getting closed, so 31st March. So if incorporation date is on or after 1st January, then 31st March of following year. So first financial year closure date, add 9 months. Subsequent AGM, 6 months of closure of financial year, 15 months of previous AGM. 15 months from previous AGM. That means the time gap between two AGM shall not exceed 15 months. If at all needed, subsequent AGM can be extended. ROC can grant extension up to how many months? 3 months. Out of these two limits, you have to consider whichever is earlier. Coming to the day of AGM, any day excluding national holiday. Suppose you planned August 22nd as AGM day. After giving the notice of meeting, government declared August 22nd as national holiday. Now what solution available? For that financial year, AGM can be conducted on August 22nd, but subsequent years AGM should not be conducted on August 22nd. If any day was declared as national holiday after dispatch of notices, for that year you can conduct AGM on national holiday, but subsequent meetings AGM is not allowed on national holidays. Commencement time should be between 9 and 6. Place at registered office or any place in the city town where registered office is located. Of course, unlisted company, they can conduct meeting at any place in India, not on earth, only in India, subject to consent of all members. And this 96 is not applicable to Section 8 company, government company. Government can decide place of AGM. However, Section 8 company, government company should be regular in filings with ROC, Section 92 annual returns, Section 137 financial statements. Time, day, place of meeting can be pre-decided by the members in the before general meeting. The before general meeting, whatever, the previous general meeting, whatever time, date, place fixed by the members, board of directors should follow it. That's it. Next, last part. Powers of NCLT to call AGM. Applicability, Section 96, you defaulted Section 96. Now any member can file an application with NCLT. NCLT may call or direct the calling of meeting. NCLT issue necessary directions. A single person shall constitute quorum. Generally quorum is 2 in case of private company, 5 in case of public company, right? Minimum. But if NCLT is calling for a meeting, even a single person, either proxy or member personally present, shall constitute the quorum and the meeting is valid. Next one, 98. Powers of NCLT to call for EGM. Applicability. If it is impracticable to call EGM or to conduct EGM, then NCLT, either on suo motu basis or application by member or director, any member or director filing an application with NCLT, then NCLT will order for a meeting, issue necessary directions. Here also same, a single person, whether member or proxy, shall constitute quorum and this meeting is also valid only. Punishment for default in complying 96 to 98. Default, holding meeting, Section 96. Complying with NCLT orders, 97, 98. The punishment is company 1 lakh plus 5,000 per day. Officer in default also 1 lakh plus 5,000 per day. Clear? Next, 122. Applicability of this chapter to OPC. Section 98, 100 to 111 is not applicable to OPC. Or resolutions, coming to resolution, how resolutions will be passed. Member making a communication to the company, an entry in the minutes is enough. Single director resolution entry in minutes is also enough. No need of board meetings also. In case of OPC default, by OPC, the company 5,000 plus 500 per day. Officer in default 5,000 plus 500 per day is the punishment. Report on AGM, this is not applicable to all companies, this is applicable only to the listed companies. Coming to the details, time, day, place of AGM, whether chairman was appointed or not, how many members attended the meeting, whether quorum is there or not, secretarial standards compliance, what are the businesses transacted at the meeting and the voting results, adjournment of the meeting, postponement of the meeting, details if any, and relevant points. So these particulars we need to give in report on AGM. Format MGT 15. The due date is 30 days of AGM. Within 30 days of AGM, listed company should file MGT 15 with ROC. It should be signed by chairman of the meeting. If not, 2 directors, one should be MD plus company secretary. plus company secretary. So listed company means definitely company secretary will be there. Penalty for default. Company 1 lakh plus 500 per day up to 5 lakhs. Officer in default 25,000 plus 500 per day up to 1 lakh. That is non-compliance of section 121. Next 100 ma. EGM Board of Directors on suo moto or based on requisition filed by requisitionist. EGM may be called for. EGM by wholly owned subsidiary to company incorporated outside India. Suppose my company, Indian company, in this company, 100% of capital was held by a foreign business entity. A foreign, that means, company incorporated outside India. Now, if at all they want to conduct EGM outside India, they can conduct only EGM, not AGM. AGM in India only. EGM can be conducted outside India by a company in which 100% of the capital was held by company incorporated outside India. If it is because of requisition, it should be signed by the members. They should possess at least 1/10 of the paid up share capital or at least 1/10 of the voting power, depending on the company with the share capital, without share capital. With the share capital, 1/10 of the paid up share capital. Without share capital means 1/10 of the voting power. So signed by members of the company who are entitled to vote. If board is conducting EGM, they should give notice within 21 days and they should conduct meeting within 45 days. In case of failure by board, then requisitionist can call for EGM within 3 months of requisition. Within 3 months of date of requisition, they should conduct EGM. If at all to that EGM, if there is no quorum, then meeting stands cancelled, not adjourned. Reimbursement of reasonable expenses. If requisitionist is conducting a meeting, so what are all the reasonable expenses required for conduct of meeting shall be reimbursed by the company, and the same shall be deducted from defaulting directors. Defaulting directors. So next one if it is a EGM by the requisitionist, they should conduct meeting only at registered office or city town in which registered office is situated, other than national holiday, and meeting commencement time should be between 9 and 6. These formalities, the formalities for AGM are common for EGM by requisitionist. So that's all about MGT. All the key points, exceptional points, tricky points also I covered in this handwritten notes marathon. So just a 2 minutes break. Hello. Yes. Fine. So share capital and debentures. If you have already watched day before yesterday, yes, you can go with preparation of another topic ma. One more time, just this PDF has been changed. Okay. Another 40-45 minutes. This session is for another 40-45 minutes. Chalo. Let's begin. So the next topic of marathon. So let's start the next topic, share capital and debentures. Starting with share. What is a share? A share means share in the share capital of the company and includes stock. Share means share in the share capital of the company and includes stock. What is the difference between share and stock? Each unit of share capital is a share, whereas stock means collection or bundle of shares. Share can be either partly paid up or fully paid up, and share will be issued directly. For the first time, share will come into the market. Next, these shares will be converted into stock, but for conversion, you need to check whether shares are partly paid up or fully paid up, because only fully paid up shares can be converted into stock. The difference between share and stock, shares are available in numbers, 1 share, 2 share, like that. Stock is available in fractions, 2% stock, 3% stock, like that, percentage fractions is available with respect to stock. Shares are not available in fractions, shares are always available in numbers. So this difference you need to remember. Chance is there in examination, there is a chance of asking these points. No company can issue stock directly. First, company will issue shares. Only fully paid up shares can be converted into stock. Next, section 43, kinds of share capital. We are having two kinds of share capital, equity, preference. But kinds different, types different. Types means we are having authorized share capital, issued share capital, subscribed share capital, called up share capital, paid up share capital. These are the types of capital, but we are having only two kinds of capital, equity capital, preference capital. Equity capital means capital other than preference capital, whereas preference capital means a share capital which carries preferential rights over equity shareholders as to the payment of dividend, as to the repayment of capital, and they may or may not have participatory rights. Equity share capital is of two types, so ordinary shares, differential rights. Now for issue of differential rights, the conditions to be satisfied, focus on the conditions, very important. First, AOI authorization is compulsory. For issue of equity shares with differential rights, AOI authorization is pakka. Next, ordinary resolution shall be passed, and if you are a listed company, such ordinary resolution shall be passed through postal ballot. Unlisted companies, ordinary resolution can be passed at the meeting, either under show of hands or e-voting or poll, that is secondary. But listed company, resolution shall be passed through postal ballot. Next, limit of differential rights. Maximum voting power from differential rights shall not exceed, maximum voting power is 74%. So voting power from differential rights shall not exceed 74% of total voting power of the company. And company should not have following defaults. And I classified these defaults into two categories for easy remembering. Subsisting defaults, time defaults. Subsisting defaults, that means at the time of issue of equity shares with the differential rights, company should not have these defaults. Time defaults means for the prescribed time period, company should not commit those defaults. Subsisting defaults, how to remember? Just remember sources of finance. How many sources of finance we are having and what are those sources? First, equity share capital, preference share capital, debentures, deposits, term loan. With respect to equity share capital, you may default dividends because capital repayment is not compulsory. Preference share capital, default may be payment of dividend, default may be in redemption. Debentures, deposits. Yes, here also two types: interest, principal, term loan, interest, principal. Except term loan and preference dividend, all other points right here itself. Declared dividend, default in redemption of preference share capital, default in repayment of debentures, default in payment of interest on debentures, deposits, interest on deposits. Any such defaults are there, first rectify, then proceed with issue of equity shares with the differential rights. Now coming to the time defaults again two types: 3 years, 5 years. 3 years, preceding 3 financial years, you should not have committed these defaults. Filings with ROC, financial statements, annual returns, and should not be penalized under RBI Act, SEBI Act, FEMA Act, Securities Contract Regulation Act. So preceding 3 years, right now we are in financial year 26-27. So preceding 3 years means 25-26, 24-25, 23-24. So these 3 years you should not have committed these defaults. Whereas 5 years, it's not about preceding 5 years, it's about rectification. When you rectified, suppose 2015-16 you made a default. Which default? Repayment of term loans, or payment of interest on term loans, or payment of preference dividends, or discharge of employee statutory dues, or IEPF transfers. IEPF transfers. So any such default is there, then rectification is important. Suppose I rectified it in 2018-19, sir. Now after this year 5 years, that means 19-20, 20-21, 21-22, 22-23, 23-24, I am disqualified from issuing equity shares with the differential rights. Next I can issue, that means from 24-25 onwards I can issue equity shares with the differential rights. Next one, other important points: notice plus explanatory statement, normal. Conversion is prohibited, ordinary to differential rights to ordinary, conversion is prohibited. Disclosures in the board report. Next one, rights of equity shareholders. Equity shareholders, other rights are same, but only bonus issue, rights issue. In bonus, in rights, you get same shares you are holding. If you are holding ordinary shares, you get bonus also ordinary share. If you are holding differential rights, in rights issue you will get differential rights only, and particulars to be maintained in the registers. Of course, section 43 is not applicable to specified IFSC public company or private company if MOA AOA provides otherwise. That is all about section 43. Simple. Next, 46, share certificate. In share certificate, in my previous notes, the punishment is not there, but now you can see, yes, punishment is also incorporated. Share certificate is a prima facie evidence that you are owner of the company, you are owner of the shares. Whereas for demat shares, record of depository is a prima facie evidence that you are having a title. Share certificate form SH1, this is applicable only for material form of shares, not for demat form. It should be issued under common seal. If common seal is there, fix common seal. If no common seal, 2 directors or 1 director and 1 company secretary should sign share certificate, or else share certificate had no validity. Duplicate share certificate. If any of your original share certificate has been lost or damaged, in case of lost, file an application plus indemnity bond. In case if it is damaged, file an application plus original share certificate, damaged share certificate, turn pieces, attach them. Here indemnity bond is not required, here original share certificate is not required. Okay, and you have to deposit a fees maximum 50 rupees per certificate. Maximum 50 rupees per certificate. Next one, disclosure shall be made that this share certificate was issued in lieu of original share certificate number, like that express disclosure is required. Time limit for issue of duplicate share certificate. Listed companies 45 days within 45 days of filing an application for duplicate share certificates. Unlisted company within 3 months, yes, duplicate share certificate shall be issued. Register form SH2, entries by CS or board authorized person. Entries shall be authenticated by CS or board authorized person with respect to register of duplicate shares. Issue of duplicate share certificate with an intent to defraud. Officer in default gets 447 punishment. For company, minimum fine 5 times of face value, maximum fine 10 times of face value or 10 crores, whichever is higher. Whichever is higher. Okay, na? Next. So next one, ignore these things, ma. ignore these points already there separately. So once again repeated, just ignore it. Yeah. So up to here section 46. Next one, 47, voting rights. 47, voting rights. All the equity shareholders will have voting rights on every resolution. On every proposed resolution, they will have voting rights. Next, preference shareholders will also get voting rights if dividend remains unpaid for 2 consecutive years. Matters affecting their rights, winding up of the company, reduction of the capital. So in these cases, preference shareholders will get voting power. But if you take this first case, they get voting power in addition to equity shareholders. That means equity shareholders and preference shareholders both gets voting powers. In which case, if dividends not paid 2 consecutive years, preference dividends not paid 2 consecutive years, so preference shareholders will also get voting rights in addition to equity shareholders. Next. Yeah. So next one, section 47, show of hands, each member is entitled to 1 vote. In case of poll, equity shares with voting rights, 1 share equal to 1 vote. Equity shares of differential rights, you need to check terms of issue. Nidhi company, maximum voting right of a member is restricted to 5%. Generally, voting power depends on proportionate, depends on your holding in the company. So how many shares you are holding in the company, that proportionate voting power you are entitled to. Suppose in a Nidhi company, I am having 10% paid up share capital, but I am not entitled to 10% of the voting power. I am entitled to only 5% of the voting power. Section 47 shall not apply to IFSC public companies where MOA, AOA provides otherwise. 47 shall not apply to the private companies and public companies, IFSC public companies where MOA, AOA provides otherwise. Next one, section 48, variation of shareholders' rights. Company share capital divided into different classes of shares. Company should have 2 or more classes of the share capital. And you need to check whether provision is in MOA or AOA regarding variation. If the provision is there, no problem. If such provision is not there in MOA, AOA, then go with issue terms. There should be no prohibition on variation. There should be no prohibition on variation. Then only company can proceed with variation of shareholders' rights. For that, consent is required. If meeting is possible, conduct a meeting and pass special resolution. No sir, for me postal ballot is applicable sir. Then you need to get consent from 3/4 in value. 3/4 in value of the issued shares holders. Only with 3/4 value of issued shares holders, you can proceed with variation of shareholders' rights. Variation of one class affecting the rights of other class, then similar consent. Similar consent you have to take from other class also. Similar consent you have to take from other class also. Consent of 3/4 shareholders in value. 3/4 in value simply. Now coming to the dissenting shareholders, they can file an application with NCLT. For filing an application with NCLT, they are having a 21 days time period, 21 days of variation, and they should possess at least 10% of the class capital. Then only their application will be valid and NCLT order is final. Whether NCLT confirms the variation or rejects the variation. If NCLT confirms the variation, variation is allowed. If NCLT rejects the variation, then variation is not allowed. Next. If NCLT rejects the variation, variation is not allowed. File NCLT order with ROC within 30 days of NCLT order. File a copy of NCLT order with ROC within 30 days of NCLT order. So that is all about section 48 ma. Next 49, 50, 51. Section 49. Calls shall be made on uniform basis. Calls shall always be made on uniform basis. And calls on shares is subject to board resolution. Board resolution is compulsory for making calls on shares. Can company accept calls in advance? It is subject to AOA, Articles of Association. If AOA is silent, calls in advance not allowed. If AOA is silent, calls in advance is not allowed. For calls in advance, there will be no extra voting, only interest will be paid. Sir, with respect to dividends, sir, go and check section 51. If AOA is silent, dividends shall be paid on face value. If AOA provides otherwise, then dividends shall be paid on paid up value. If dividends are to be paid on paid up value, then there will be no dividends on calls in advance. So subject to AOA. Next, section 52. Section 52. Application of securities premium on issue of shares. If issue price is greater than face value, the difference amount is premium shall be transferred to securities premium account. Application of securities premium. You can utilize securities premium only for 5 stated purposes. That is B square E P square, buyback, bonus issue, expenses connected with issue, premium on redemption, preliminary expenses. But if you are a company falling under section 133, if you are a company which is required to prepare financial statements in accordance with accounting standards, section 133, then for you only B square E is allowed, buyback, bonus issue and issue expenses, that's it. Prohibition on issue of shares at discount. Section 53, company is prohibited from issuing shares at discount. Issue of shares at discount is void, but we had 2 exceptions. One is sweat equity, the other one is conversion of debt into equity, either as per SRP or DRS subject to RBI guidelines. Except these 2 cases, if company converts, or if company issues shares at a discount, it is void, and punishment to the company or as well as officer in default is 5,000 or amount raised through issue of shares at discount, whichever is lower. Along with that, interest, you need to refund those monies plus interest at the rate of 12% per annum. Next, section 54, sweat equity shares. Company can issue equity shares at discount or for a non-cash consideration to its employees. Employee means permanent employee, including director, whether whole time or not. He or she must work in our company or subsidiary or holding company, either in India or outside India. Now, what are the conditions to be fulfilled for issue of sweat equity shares? The answer is sweat only. If you see special resolution, W, only working employees will get sweat equity shares. E stands for existing class of shares. A, of course, AOA authorization will be there. Next one, T, time limit 1 year after incorporation. Such time limit is not there. Sweat equity shares, can be issued even after incorporation. No need to wait for 1 year. Even after incorporation, immediately you can issue sweat equity shares. And what is the current market price? So to whom we are giving sweat equity shares? Everything to be made known to the members. Next, listed company should follow SEBI norms. Unlisted company should comply with Companies Act provisions. Sweat equity shareholders rank pari passu with other shareholders, even though they are getting shares at a concessional prices or a discounted prices or for non-cash consideration, they will get same treatment like other members. These conditions are very important. Once special resolution is passed, special resolution is valid for 12 months. That means allotment should be done within 12 months of SR. Coming to the limit of sweat equity shares, in a year, up to 15% of existing paid up equity share capital or 5 crores, whichever is higher. It's not lower, it's higher. Here you can see whichever is higher. But during the lifetime of the company, 25% of the existing paid up equity share capital, they can go up to 25%. In a single year, 15% or 5 crores, whichever is higher, but throughout the lifetime, 25%. Suppose in first financial year, I am going with 15%. Next financial year, I can go only up to 10% only. Why? Because 15% already over in previous year. Now, I can go with only 10%. Next one. Whereas for startup companies, the limit is not 25%, the limit is 50%. That benefit is available up to 10 years after incorporation of company. Lock-in period is 3 years. Lock-in period is 3 years from the date of allotment. Valuation of shares, price determined by registered valuer. And valuation of assets created by these employees to whom we are giving sweat equity shares. That valuation should also be done by registered valuer. If any asset is coming to the company, yes, carry it to balance sheet. In other cases, record it as an expenditure. Next one, disclosures in board report, maintenance of registers. This is common. Disclosures in board report, maintenance of registers. This is common. Next, section 55, issue and redemption of preference shares. For issue of preference shares, 5 conditions to be satisfied: AOA authorization, special resolution, and company should not have subsisting default in repayment of or in redemption of preference capital or payment of preference dividend. In case of these defaults, rectify and then issue preference shares. Preference shares shall always be redeemable and the maximum tenure is 20 years. For infra companies, the tenure is not 20, 30. However, from 21st year onwards, every year 10% redemption should be done. Next one, coming to the redemption, shares to be fully paid up. Partly paid up shares cannot be redeemed. Only fully paid up shares can be redeemed. Redemption value is consisting of 2 components. One is face value, other one is premium. Face value, for redeeming face value, you can utilize company profits, of course, create CRR, or you can use issue proceeds. Here CRR is not applicable. Now premium on redemption of preference shares, you can utilize company profits or you can utilize securities premium. But if you are a section 133 company, you can utilize only company profits. You cannot utilize securities premium. Next one, further redeemable preference shares. This is nothing but deemed redemption of preference shares. Company is not in a position to redeem preference shares. Then, with the consent of 3/4 value of the holders, and subject to NCLT approval, company can convert old preference shares into new preference shares. And for redemption, for such redemption, if there are any dissenting shareholders, they must be paid in cash. They should be settled. So we need consent of 3/4 in value. Suppose dissenting shareholders are there. For them, deemed redemption is not applicable. Pay them in cash. Next one, even though capital is getting increased, section 61, capital is getting reduced, section 66, these provisions are not applicable. Understood? Fine. Next one. Yeah. Next one, section 56. Section 56, transfer and transmission of securities. Transfer and transmission of securities. What can be transferred? If you are a company with share capital, securities can be transferred. If you are a company without share capital, interest can be transferred. For transfer, 2 parties are required: transfer or transferee. Conditions for transfer: yes, SH4 is compulsory. It should be executed by transferor and transferee. It should be dated, stamped, delivered to company within 60 days of filling SH4. Within 60 days of filling SH4. That means within 60 days of execution of SH4, file these documents with company. SH4 plus original share certificate, if not, at least letter of allotment. In case application copy was lost or delayed, then file an indemnity bond. Then company will register the transfer and issue share certificate in the name of transferee. These conditions are not applicable to demat form of securities, transmission of securities, and of course government company also. For government company also, these formalities are not applicable. Next one, punishment for personation of shareholder. But before that, if you see, section 56 continuation is there. Section 56. In case of partly paid up shares where application is filed by transferor alone, company should not register the transfer without giving notice to the transferee. 2 weeks. So within 2 weeks, transferee should raise an objection. If there is no such objection, company can proceed with issue of partly paid up, company can proceed with registration of transfer in the name of transferee. Time period for delivery of certificates. Subscriber to MOA, within 2 months from incorporation, they should be given share certificate. Allotment of shares, allottee should be given share certificate within 2 months. Transfer of securities within 1 month from receipt of instrument. Transmission of securities within 1 month from receipt of intimation of transmission. And for allotment of debentures within 6 months from date of allotment. In case of specified IFSC companies, The time limit is 60 days from incorporation, allotment, transfer, transmission. No above time limits ma. For AFSC companies only one time limit, that is 60 days from incorporation or allotment or transfer or transmission for AFSC companies. If company commits any default, company officer in default, 50,000 penalty to the company officer in default. In case of fraud, section 447 is applicable. Okay, now next, forged transfer implications. But before that, yes, forged transfer we need to complete. Then I'll come to section 57. Just listen. Forged transfer. Original owner, his name will be restored. His name will be restored in the register of members. He can claim all the benefits during that period which were paid to other person other than original member. And the person who is responsible for such forged transfer is liable to compensate company. And suppose this forged transfer shares to innocent transferee. Then innocent transferee can claim compensation from the company. Then what about company, sir? Company, whatever amounts paid to the owner or innocent transferee, these losses company can claim compensation from the person who is involved in forged transfer. Okay, na? So that's all about transfer and transmission. Coming to 57, punishment for personation of shareholder. Punishment for personation of shareholder. Any person deceitfully personates owner of any security or interest, share, warrant or coupon, and obtains or attempts to obtain security, interest, share, warrant, next, any such coupons, then that fellow will get imprisonment minimum 1 year, maximum 3 years, and fine minimum 1 lakh, maximum 5 lakhs. So personation of shareholder, this is the applicable punishment. Next, section 58. Refusal for registration of transfer and appeal against such refusal. Let's see. First, company duty. It is the duty of company to issue notice of refusal within 30 days of receipt of documents for registration of transfer. Such notice shall be given to transferor or transferee or person making an intimation of such transmission. Then the aggrieved party, nothing but transferee or person intimating transmission, aggrieved party shall file an appeal with NCLT. What is the time limit? In case if we receive notice of refusal within 30 days in case of private company, within 60 days in case of public company, appeal shall be filed with NCLT. Sir, notice of refusal not yet reached, sir, or not yet received, Then 60 days of delivery of documents under section 56 in case of private company, 90 days of delivery of documents under section 56 in case of public company, appeal shall be filed with NCLT. Finally, NCLT will decide whether to dismiss or order for registration. NCLT may dismiss the appeal or NCLT may order for registration of NCLT may order for registration of transfer. Now comply NCLT order within just 10 days of contravention. Within just 10 days of contravention, comply with NCLT order. Just one second. Yeah, fine ma. Comply NCLT order within 10 days. When NCLT order has been issued, from that date onwards, within 10 days, comply with NCLT order. In case of contravention, imprisonment 1 to 3 years and fine 1 to 5 lakhs. Contravening NCLT order, this punishment is applicable. Next, section 59. Rectification of register of members. Aggrieved person or member or a company, if he is of opinion that his name was wrongly entered or his name was wrongly omitted, or if there is some unnecessary delay by the company in updating the registers, then he can file an appeal with NCLT. If he is a foreign member, he can file an appeal with competent court outside India. These authorities had a right to dismiss the appeal or order for rectification. Comply NCLT order within 10 days, or else contravention, this punishment is applicable. Okay, na? Next, section 60. Section 60, here you can see publication of authorized share capital, subscribed share capital, paid up share capital. Wherever you publish authorized share capital, there itself publish subscribed share capital, publish paid up share capital, or else company punishment 10,000, officer in default. The punishment is 5,000. 5,000 per default. Next, section 61. Section 61. Powers of limited company to alter its share capital. AOA authorization is compulsory. AOA authorization is compulsory for increase of share capital, for alteration of share capital. Ordinary resolution is required for alteration of share capital, not special resolution. OR is enough. And alteration is of 5 types: increase, consolidate and divide, shares to stock, stock to shares, split, or decrease. In case of consolidation and division, NCLT approval is required if changes in voting. Because of consolidation and division, if there is any changes in voting percentages, voting powers, then NCLT prior approval is compulsory. In case of split, face value, paid up value. Face value, suppose 10 rupees split into 2, 5 each. Then paid up value 6 rupees. For example, it should be split in same proportion, 3 and 3. Okay, na? Next one. Filing with ROC, it should be done within 30 days of event. Within 30 days of event, yes, ROC filing in form SH7. Next. Section 62. Further issue of share capital, which is not applicable to Nidhi company. This provision is not applicable to Nidhi company. Observe carefully. Issue of further shares. Whenever company need money, it can issue further share, it can make further issue of shares. Further issue of shares. First priority to the existing members, next employees, last other than members and employees. For existing members, letter of offer should be prepared and it should be dispatched to the members at least 3 days before. At least 3 days before opening of subscription list. Offer period minimum 7 days, maximum 30 days. Of course, this 3 days or 7 days can be reduced in case of private company and IFSC public companies with the consent of 90% of the members. Renunciation benefit is there unless AOA prohibits renunciation. If AOA prohibits renunciation, then renunciation is not there. This, and you can go to the employees by passing a special resolution, whereas private company, IFSC public company, private company which is regular in filing annual returns and financial statements, similarly IFS company, for them no need of SR, OR is enough. And coming to the others, maybe identified persons under section 42 or maybe public prospectus under section 23, then copy of special resolution is special resolution to be passed, and for non-cash consideration valuation report is compulsory. This section 62 is not applicable in case of convertible debentures, in case of convertible preference shares. Why? Because at the time of issue itself, a special resolution has been passed. At the time of issue of convertible debentures or convertible preference shares, special resolution has been passed. So at the time of conversion, even though you are issuing further issue of equity shares, for that further issue of shares to the preference shareholders, to the debentures where we are converting their securities, fresh special resolution is not required. Next one, if company has taken loan from the government or if company has issued debentures to the government, now company is not in a position to repay those loans. Company is not in a position to repay those loans. Now government may order to convert such debt into equity. If at all you are not interested, you can go to NCLT. For going to NCLT, 60 days time limit is there, 60 days from the date of government order, or else government order is enough for increase of authorized share capital. That is about section 62. 63, issue of bonus shares. For issue of bonus shares, the available sources are free reserves, securities premium, capital redemption reserve. Revaluation reserve not allowed. And conditions for issue of bonus shares: AOA authorization, board resolution and members resolution OR, and company should not have committed following defaults. Default in payment of interest on deposits, and debt securities, interest on debt securities, employee statutory dues. So these defaults should not be there. Next one, company can issue only fully paid up shares as bonus shares, and the person receiving bonus shares, he should hold fully paid up shares only. Bonus shares shall not be issued in lieu of dividend. Bonus shares shall not be issued in lieu of dividend. Once dividend is declared, it should be paid in cash. In the place of dividends, bonus shares cannot be issued. Next one. One second. Yeah. Next, section 63, last point. Decision of board recommending a bonus issue shall not subsequently withdraw the same. Once bonus shares proposal was made by the directors, it cannot be withdrawn by the directors subsequently. So request the members not to pass ordinary resolution, automatically it will be lapsed. Next one, section 64, notice to be given to the ROC for alteration of share capital. In case of alteration of capital under section 61, redemption of preference shares under 55, and government orders converting equity into government order to convert debt into equity. In these three cases, company should file SH7 and it should be filed within 30 days. It should be filed within 30 days of event, or else default company gets punishment. Next one, section 66, reduction of share capital. Section 66, reduction of share capital. Three possibilities are there. First one, cancellation of unpaid capital. Second one, cancellation of unrepresented capital, where you will solve problems in internal reconstruction chapter. And last one, cancellation of unwanted capital. In these three cases, reduction of share capital, section 66 is applicable. First of all, section 66 is applicable to companies limited by shares and companies limited by guarantee with share capital. They need to file an application with NCLT. For that, first they need to pass a special resolution. Company should pass a special resolution. Along with application, attach copy of SR and copy of minutes of the meeting. Also attach list of the creditors and auditor's certificate regarding accounting treatment in the books of accounts. NCLT, upon receipt of application, forward that application to 4 persons, CG, ROC, SEBI only for listed companies and creditors. And NCLT will wait for 3 months. Within 3 months, if there is no representation from these parties, then NCLT will give approval subject to discharge of creditor dues, subject to either creditor dues should be determined, secured, and finally they should be consented. Now, yes, once NCLT passing an order confirming the reduction, that order should be published and that order should be filed with ROC within 30 days of NCLT final order date. Of course, I forgot to tell you, company should not have defaults with respect to deposits, interest on deposits. Only that company can avail the benefit of section 66. So next one. Now, ROC filings, attachments are certified copy of NCLT order, minutes approved by NCLT, along with that altered MOA, where you will see revised face value and revised paid up value. The difference of these two will be the maximum liability of the members. But there may be a default. What kind of default? Suppose misrepresenting the nature of creditors, misrepresenting the amount to the creditors. Even if I reduce creditor balance, or even if I show unsecured creditors as secured creditors, in these cases, the directors, the officer in default gets section 447 punishment. Whereas for members, the persons who are members at the time of ROC filing about capital reduction, those people will get their original liability. Before reduction, what would be their liability? That liability will be applicable. Next, section 67, restrictions on purchase by company or giving of loans by company for purchase of its shares. 67, simply financing someone to purchase its shares or to purchase its holding company shares, not allowed. Company limited by shares or company limited by guarantee with share capital has no power to buy its own shares. Of course, buyback is allowed. Buyback section 68 is allowed. But here I am telling about restrictions on financing or restrictions on purchase of shares by a company. Okay, now this particular provision, this particular section is not applicable to Nidhi companies. Nidhi companies, whenever members want to discontinue, disassociate with company, they can surrender the shares. Company will take the shares and company will pay the money. Public companies, directly or indirectly, they cannot finance anyone for purchase or subscription of its shares. Of course, it had 3 exceptions. Banking companies, regular course of business allowed. Banking companies regular course of business allowed. And a scheme where listed companies following listed companies through stock exchanges, the price determination. In case of listed companies, go with stock exchange quoted prices. Unlisted companies, valuation by the registered valuer. So if there is a scheme where for the benefit of employees a trust has been formed, and for the trust SR has been passed, and employees, for the benefit of only employees, the two max to max 5% of paid up share capital plus free reserves. Max to max 5% of paid up share capital plus free reserves. That much amount only company can finance the trust for purchase or subscription of fully paid up shares. And the disclosures are required, the disclosures are no voting rights to these employees, only trustee will exercise voting rights. Next one, of course we can finance employees individually, but that employee should not be a KMP, that employee should not be a director. Maximum finance 6 months salary, and with that money he should acquire only fully paid up shares, not partly paid up. And entire this section is not applicable to private companies, IFSC public companies, where in a private company there is no body corporate as a member. Total borrowings are less than twice of its paid up share capital or 50 crores, whichever is less, and there should be no subsisting default in the above borrowings. Such private companies not required to comply with this section. They can proceed with financing any person to acquire their shares. Next one, section 68, powers of company to purchase its own shares. Powers of company to purchase its own shares. Let's see. First, source of funds. Free reserves, securities premium, issue proceeds. Only these three. Of course, shares involved in buyback and issue should not be same. Different class of shares. Okay. Conditions for buyback: AOA authorization, check once. Resolution: for financing buyback, amount required is 10% of the equity share capital plus free reserves plus securities premium. BR is enough. More than 10%, that means up to 25%, SR is required. However, in a year you can buy back maximum 25% of paid up equity share capital. Post buyback debt equity ratio should not be more than 2:1, max 2:1. Only fully paid up shares can be bought back. Listed company should comply with SEBI norms, and buyback should be completed within 1 year of either SR or BR. Beyond 1 year, once again you need to take BR or SR. You need to dispatch notice of meeting along with that explanatory statement. If at all company need to pass special resolution, notice of meeting and explanatory statement is compulsory. In that explanatory statement, disclose the material facts, necessity for buyback, class of shares, and amount required for financing buyback, and what is the time limit for completion of buyback. All these particulars should be mentioned in explanatory statement. Next, buyback. Buyback can be made from existing members on proportionate basis. 1 out of 10 shares you are holding, or from open market. Next one, or from the employees to whom we have given sweat equity shares or ESOPs. Next one, company has to file a declaration of solvency SH9 with ROC and SEBI in case of listed companies. This declaration of solvency should be signed by 2 directors. One of 2 directors should be MD, and it should be supported by affidavit stating that next 12 months company will not be dissolved, will not be liquidated. Even if company gets liquidated, company assets are sufficient to discharge their liabilities. Next one, time limits, very important. Once you file a letter of offer with ROC, within 20 days of filing with ROC, dispatch letter of offer to the members. Offer period minimum 15 days, maximum 30 days. Once offer period is over, for verifying that offer letters, company will have 15 days time period for closure. One second. Offer period minimum how many days, 15 days. For this timeline, just let me draw here. ROC filing is done. Then within 20 days, dispatch letter of offer to the members and mention offer period. Offer period should be minimum 15 days, maximum 30 days. Once offer period is over, company will have 15 days time to verify whether applications are valid or not. Within 15 days of closure of offer, within 15 days of closure of offer, company will verify the offers. And within 21 days of offer closure, if at all you want to communicate rejection, communicate the rejection. Sir, your application was rejected because of these reasons. Such communication should be done within 21 days of offer closure. No sir, his application was selected for buyback. Then make payment. Make payment within 7 days of verification. Once verification procedure is over, so application was selected, within 7 days make payment. Sir, verification procedure over, sir, we can't make buyback of that application, sir. Then communicate the rejection within 21 days of closure of offer. Next one, extinguishment. Securities which were bought back shall be extinguished within 7 days of completion of buyback. Within 7 days of completion of buyback, securities shall be scrapped, should be destroyed, and company cannot make further issue for the next 6 months. Even rights issue is also prohibited, but bonus, conversions, sweat equity, ESOPs, all these are pre-existing obligations. These pre-existing obligations can be done. Bonus issue, if you proceed with buyback out of profit, CRR will be created. CRR will be utilized for CRR shall be utilized for issuing bonus shares. Register of buyback, SH10. Register of buyback, SH10. It will be in the custody of CS or authorized person. Shares so bought, details of cancellation, consideration paid, extinguishment, and all others shall be recorded in the register. A return of buyback return shall be filed in form SS11 within 30 days after completion of buyback, both with ROC and SEBI if a company is listed company. Next one, the declaration of complaint shall be signed by 2 directors. One among the 2 directors should be managing director. In case of non-compliance, minimum 1 lakh, maximum 3 lakhs punishment to the company. For officer in default also, minimum 1 lakh, maximum 3 lakhs. If buyback is made out of free reserves, then nominal value of shares so bought back, nominal value shall be transferred to CRR. It shall be utilized only for issuing fully paid up bonus shares. Next, prohibition of buyback. Buyback is prohibited in the following cases. If company has committed defaults in repayment of deposits, payment of interest on deposits, repayment of debentures, redemption of preference share capital, repayment of term loans, payment of interest on term loans, dividends, then company is prohibited from buyback. What is the solution, sir? Rectify and wait for 3 years. Rectify and wait for 3 years. Non-compliance, section 92, section 123, section 127, 129 of non-compliance of these 4 sections also buyback is prohibited. First, if you have these defaults, rectify. After rectification, wait for 3 years. Then you can proceed with buyback. And last concept of share capital and debentures, that is debentures, section 71. Debentures includes debenture stock, bonds, any instrument evidencing debt, but debenture excludes instruments specified by RBI Act 1934 or instruments that were already notified in chapter 3D. So these are not treated as debentures. Manner of issue of debentures. For issue of debentures, special resolution is required only for convertible. With respect to non-convertible, up to section 180 subsection 1 clause C limits, BR is enough. Beyond the limit, SR is required. Debentures shall not carry voting rights. Company is prohibited from issuing company is prohibited from issuing debentures with voting rights. Secured debentures, maximum redemption period is 10 years. Infra companies, redemption period is 30 years. Next one, appointment of trustee. Whenever offer was made to the existing members more than 500 or offer is made to the public, trustee appointment is compulsory. Offer made to public or offer made to the existing members more than 500, trustee appointment is compulsory. Charge shall be created on either company assets, associate company assets, holding company assets, subsidiary company assets in favor of trustee. The market value of charged assets should cover not only debenture principal portion but also interest portion. Coming to the trust deed, shall be executed within 60 days of allotment. Within 60 days of allotment, trust deed shall be executed. Debenture redemption reserve, non-convertible portion, for non-convertible portion only create DRR, that too for these companies. For convertible portion, we will give equity, no need to pay in cash. So therefore, DRR is not required. DRR is required only for non-convertible portion, that too how much amount? 10%. 10% of the debentures maturing. Next one, that is applicable only to the unlisted companies other than banks and financial institutions. Coming to the investments, coming to the investments into the liquid assets, such investments shall be made minimum 15% for the debentures maturing in the financial year. For 26-27 debentures maturing in the financial year 26-27, create the invest in liquid assets by 30th April 2026. Keep them in government notified securities or make the fixed deposit with banks. And this 15% investments is applicable only to the two companies, listed companies, unlisted companies. Listed companies only for publicly placed debentures, unlisted companies for both publicly placed debentures and privately placed debentures. First of all, if you observe carefully, only unlisted companies are required to maintain DRR, but investments are required to be maintained by both listed company and unlisted company. Listed company only for public portion, whereas unlisted company public portion as well as private portion. Next one, DRR shall be created out of divisible profits used only for redemption of debentures. And appointment of trustee, you can see here, offer made to the public or members exceeding 500. Prior written consent is required, and disclosure of debenture trustee is important. So you need to disclose who the debenture trustee. Coming to disqualification, he should not be a beneficial holder. See, he can be a registered holder without beneficial interest, but he cannot be a beneficial holder of the shares. Promoters, directors, KMP, officers, employees of cash company disqualified. Relatives of above people of company also disqualified. Only company here. Here 4 companies are there. Here only 1 company is there. Creditor disqualified. Debtor of 5 companies disqualified. Surety also disqualified. Pecuniary relationship during the last 2 preceding financial years or current financial year is also disqualified. Next one, removal of trustee. Removal of trustee. For removal of trustee, 3/4 value of the holder's consent is required for removal of trustee. And for filling vacancy, if it is a casual vacancy, any reason, death, disqualification, BR is enough. If it is because of resignation alone, BR alone is not sufficient. Majority of debenture holders should also give approval, then only appointment is valid. To fill the casual vacancy, any person getting appointed as depositor, debenture trustee. So if it is because of resignation, along with BR, majority of debenture holders consent is also required. Trustee shall take all the steps to protect interest of debenture holders. Debenture trustee, if he fails to exercise reasonable care and diligence, then he will be punished. Any provision exempting debenture trustee from breach of trust is void. Of course, we had an exemption. Exemption is with 75% in value of debentures holders consent. With 75% of debentures value holders consent was obtained, then he will not be punished, he will be discharged. And company should pay interest and redeem debentures as per terms and conditions. Breach, in case of terms of conditions are broken, if the terms were violated, check whether it is an anticipatory breach or actual breach. Anticipatory breach, trustee will request NCLT to impose restrictions on future borrowings. Actual breach, trustee or holders will request NCLT to order company for payment. And with respect to payment of interest, redemption of debentures, specific performance, that means timely payment of interest, timely repayment of debentures is must. Next, finally, powers of central government. Procedure for securing debentures, form of trust deed, inspection copies, DRR quantums and others. All these things CG may specify. CG may specify. CG is having power to prescribe forms for these things. So with this, share capital and debentures revision is over.